Hey, everybody. Welcome. Just waiting for a few more people to arrive and we'll kick off. Okay, Azad, I'm just making you co-host. I think you've been promoted to speaker and now you're co-host. All right, I think you put a request in.
Hey, can you hear me?
Yeah, looks like you're co-host now.
Cool.
Awesome. Okay. Hope everybody's doing very well. Been a very eventful week, especially for September time. Normally, August to September, you starts to take into the end of September till things get a bit more eventful in the markets. But crypto and Bitcoin never sleep. So, just going to give some brief updates on the different things that are happening in my world, and then we'll just jump straight into the AMA. The whole point of these is this is your time. Go through. We'll try and keep it a bit narrow in terms of topics, but happy to take this wherever you want it to go. And as we start, I'll cover a few topics very briefly, and just request if you'd like to come up to the stage and ask a question, put your hand up or request to be a speaker. And Azad, we'll let you in. We'll bring a few people up, and we'll carry on until we are done, really. So just a few topics I suggested. In general, Bitcoin, how are we doing today? I am expecting further weakness in Bitcoin. I never really talk about price, but in general, there's a lot to roll out in the Bitcoin markets. You've got, the Bitfinex hacked coins that are going to come in back onto the market at some stage. There's some Silk, some Ross Ulbricht Silk Road coins that are going to be coming at some stage. There's also the Mount Gox ones, which are due to be released at some stage soon. And also the results of the Chapter 11 as well, what happened. So it looks like Voyager is getting through to a bid, but there may be some kind of reorg proposal by the management team that comes through. I can't discuss non-public information on those ones, but I can discuss the public information and do a bit of speculation as well. And then obviously the Celsius one looks like it's going to be extending throughout the rest of this year. So I don't predict or foresee any immediate imminent liquidation, but I think it's very desirable for us to really try and get a reorg out of those Chapter 11 companies at the moment, rather than moving it or risking it going to any kind of Chapter 7 or Chapter 11 liquidation. So really focused on trying to avoid that. The way that I think people should be thinking about these things is have a strategy whatever happens. And that's really the one way of looking at the strategy that I would like to avoid the most when thinking about some of these Chapter 11s is liquidation. I think it's bad for the market. I think it's really, really bad for those that are going to lose money on that process. And I think it's bad for them in terms of how much it will set them back and just morale in general. So I think that's a very avoidable process. Also, some of the predatory offers that could come from that. They'll be, selling off all these various assets. Will just mean that those that accumulate them at the cheapest rate will benefit, and then the community doesn't benefit from them. So I think it's a very undesirable result all over. But I can also understand why some people believe that that's the best approach, given some of the cash burns in some of these companies in those Chapter 11s. So those are, I'm sure there'll be lots of questions and topics around that because the community has always got a lot of questions on that. So I do expect, some kind. I think there's a bit more weakness. I don't think we've hit capitulation stage. The market is a lot quieter. When it's quieter, I get a lot more excited about the markets. I'm a bit contrarian. When people are really, really excited, I'm a bit calmer. But when people are really, really hitting rock bottom, that's when I get really kick into mode of trying to create as much content to support people. Also, look for much of the deals that get to some more realistic valuations. They can go a bit crazy in the bull markets, and it's where a lot of my portfolio companies and companies that I've invested in really kick into build mode, improve the systems that they weren't able to improve during the time when customer service was beyond control. It really takes out the people that were just here just for the money. They disappear, and you end up with the hardcore people that really believe in this industry. And the longer those sideways and bear markets go on for, the more hardcore it gets. And then everyone, you start to see the difference between the YouTube influencers that were just there pushing pumps and dumps versus the ones that are just bringing in real quality content. And from all my times going through all of the bear markets in Bitcoin, the most amount of wealth has been built during those bear markets. Now, I know that some of you are experiencing one of your worst times in financial history. And I did create a video on that, if you haven't seen it already, on how to recover from financial disaster. It's not necessarily sexy. It's not necessarily what you want to hear, but it's the truth. Really start to put together a longer term plan for yourself. If you're experiencing, the funny thing about bear markets is those with cash, those that have implemented this, are the ones that get to survive the bear markets and build real wealth as well. And I want that for all of you. But if this is not your time, because there's a few more, you've been either a victim of some of these circumstances, or you've owned up and taken a bit of responsibility and realized that you overexposed yourself. Whichever one is for you, own it, accept what it is, and develop a plan to move on, because next time there will be another bear market, even if it's not in this cycle, and you're going to be a lot wiser, know exactly what to do. Really every bear market has produced that, and all the people that I know that have survived these bear markets, they've become a lot wiser to the next one. So if this is your first one, congratulate yourself. You have officially graduated. And if you're still here, you're probably going to stay throughout. And if you stay throughout, this is one of the most exciting, interesting markets to be around in. Educate yourself, get involved in projects. Maybe even, I know that there's layoffs in lots of companies, but maybe use this as an opportunity to get into the sector when everyone else is trying to get out of the sector. I've always, in my whole involvement in the last decade, tried to take the contrarian and do the opposite of what everyone else is doing. And that served me pretty well. But it does require long term in order to do that. So that's the Bitcoin. At the same time, we had the merge. So the merge has successfully completed in Ethereum. I did a couple of spaces where I was invited to discuss that. One of those was discussing a bit of skepticism, and just to be, people take me out of context sometimes. I invested in the Ethereum ICO, and I still hold those ETH tokens, and it's my second largest position outside Bitcoin and outside private equity. So it's probably, if you combined all my private equity, then it's my third largest position. So I do have a vested interest in it succeeding, but I also know it's a lot more speculative and risky, just because of its ability to change, because of its culture of innovation. So that's a plus and a negative. I do have concerns about the long-term viability of proof of stake. I think it will change the culture of Ethereum from focusing on utility to focusing more on more of its properties as potential store of value, and also the technical difficulties will drive people towards putting it on exchanges, using services where the actual stakers and the owners and the controllers of the network become companies that are going to have a lot more control, making it a lot more centralized. That is my big fear and concern. And so far in my early theses, I've seen people chucking all of their ETH over to exchanges because they wanted to get the second ETH. I discussed and I was sharing my memories of like when the original version of Ethereum was Ethereum Classic, and the version of Ethereum that just moved to proof of stake, it was actually a hard fork of the original Ethereum. And the hard fork didn't contain transactions where many members of the Ethereum Foundation lost money as a result of a hack in a smart contract called the DAO. So I gave a bit of insights in that, and people are chucking it over to exchanges in order to get their ETH-W, which is the proof of work chain. I think it's maintained a little bit of value. It's got volume, but in the past, hard forks have performed awful compared to the original chains. And the nature of Ethereum now is that the stable coins, USDC and USDT, determine what Ethereum is. Therefore, they made that early call that they back the proof of stake chain. And I think the proof of work chain, again, not financial advice, not investment advice. I discourage trading. I hate trading. I used to be a market maker on the markets. Ever since then, seeing all the catastrophes that people have been through, I've become a longer term dollar cost averager. And that served me very well. And so trading is something I really discourage. But if it is your game, then people are looking to try and take advantage of that. I think last time I looked, the price was about $12. We'll see where that goes. Crazy things happen in crypto. So even if something is an outright scam, it can still maintain some value and then lose that value because of the reasons why I hate trading, because of manipulation of markets. As a shareholder in many of the exchanges, I see many of the shenanigans that very wealthy people do. And I really despise it and try to avoid it. But they send funds over to exchanges in order to change sentiment. And then there's organized groups that do all sorts of stuff. My perspective on that is that we're involved in the highest performing asset class in history. And there's just being a real simple investor has produced life-changing wealth for so many. And the ones that get involved in all these games, they always end up blowing up a massive percentage of their wealth. So I just try and avoid all those games. And I revealed exactly how I invest on retirementplanb.com. That is still how I invest, whether it's bear markets, bull markets, and just get myself in a position where whatever happens, I'm not in a position where I blow up or exposed to different forces, whether it be wars, pandemics, central bank digital currencies, upwards markets, downward markets, inflation, deflation, whatever it may be. So anyway, that's a bit of a tangent from the merge, but the merge has happened. I'm a bit sad that the only successful proof of work chain, which I think is the key asset that Ethereum has, is now no longer. It is proof of stake. And so it goes in with the masses of all of competing with all the other proof of stake chains, which are a lot easier to bootstrap than the really hard part, which is creating a proof of work network. And Ethereum had a good one, despite the fact that there was pre-mines and various other things that make it slightly different to Bitcoin. Okay, so that's the merges. What else have we got? Chapter 11's covered a little bit on that. BnkToTheFuture side. So we've been for the last year in license application mode. We put out 5 different license applications. Some of those are going to take longer, but there are some imminent ones. And I'm really excited about making some additional announcements. One thing I learned a long time ago, never make an announcement forecasting what a regulator is going to do. Because regulator are really a power to themselves, and trying to plan around regulators doing stuff is always a losing strategy. So I try to only announce things once they are actually ready to be announced. But we've been really focused on really getting ahead of a lot of the regulatory crackdown that we were forecasting. We've got different regimes that we've been applying with, whether it be virtual asset service provider, retail securities, and various other things, custody. We've been really, really busy using this opportunity to try and get ahead of what we thought would be coming next. So then we can get ready to just be in a strong position. So it feels like such a long time. It was October last year that we rebuilt BFID2 in order to accommodate travel rule, retail securities, global securities, US regulations, global various other jurisdictions. Then we had to have all of the upgrades to AML laws, virtual asset service provider travel rules, all of the shit that you don't see in the background. It's just incredibly frustrating that comes with running a financial services company. So we've been working really hard on that. We've got a big list of clients waiting to do their capital raises. We've got countries, and we've got a massive waiting list of people looking to set up their retirement plans. As soon as those licenses come in, we've been preparing and we're ready to go into full-blown scaling as soon as we get those green lights. So there's a little teaser for you. And we also, the final thing, I think Sean will be jumping in at some stage. We announced the letter of intent that we signed for Salt Lending. Salt Lending, if you don't know, they created the crypto lending market, and as the market started to go into distress, we caught up with Sean. And so the history of crypto lending, for those of you that don't know it, is we were at a conference called the Satoshi Roundtable, where the executives of all of the crypto companies meet once a year. And when we were there, a guy called Eric Voorhees that I met, and I invested in his company Shapeshift. He wanted to figure out a way of not selling his Bitcoin, but unlocking some dollars without a tax liability. And he gave that that concept to Sean Owen. And then I later made an investment, and Salt Lending was created. It got a bit of a regulatory slap really early on, and so it had to spend a lot of time on licenses and negotiating, a settlement with the SEC. And that really brings it to where it is now, where it's reached that settlement. It's out the other side. It had the whole thing of when you launch a token that was meant to be a utility token, and then the SEC says it's a security, and then it had to go through that whole process, which ended up making it a public reporting company. And so we decided that with all of our aspirations in Bitcoin investment banking that we've been working on over the last decade, with some of the sovereign initiatives, that we would really combine the first crypto lending platform with the first Bitcoin and crypto securities platform in order to make some really incredible opportunities and continue our financial innovation. For those of you who don't know, we created the first ever Bitcoin mining bond, the Bitcoin bond, in 2014. We created the first Bitcoin venture capital fund, invested in companies like Kraken, Bitfinex, Bitstamp, many others. We created the ability for people to invest compliantly in tokens that were utility tokens, but in compliance with securities laws without changing their utility status. People got exposure to Ethereum that way. We did Ethereum mining-backed securities, similar to mortgage-backed securities, but backed by Ethereum mining. And now, that brings us to where we are now, where everything seems to be moving towards the regulators and Biden making announcements today around their regulatory frameworks for this industry. And Gary Gensler started to say that he considers all staking securities as well as all tokens and crypto virtual asset securities. And so there's a bit of a power play across all the different regulators in the US trying to determine who gains jurisdiction over these different services. Biden just said, look, we've got to get ahead of it. We want to launch FedCoin. We want to get ahead for the next financial crisis, is the code word, because I believe that central bank digital currencies will be the new version of a bank bailout. rather than any kind of reorg bail-in like Lehman Brothers or the Cypriot banks went through. I think that the new model is replace banks with central bank digital currencies, hence the importance of maintaining this decentralized proof of work Bitcoin, and also making sure that we get some clarity on the proof of stake stuff, but really pushing for decentralization and not for everyone putting all of their coins on exchanges and then those exchanges really being subject to many of the things that we know regulated companies have to be subjected to. Right. Okay. So that was, as usual, I did my a bit longer than I thought. We've got Sean up here as well. He can jump on stage at some point if there's any questions specific towards the Bank to the Future and Salt thing. Full disclosure, we are working on definitive terms and pending regulatory approval on that one. And the reason we announced it ahead of time is because many of those that have initiatives in these Chapter 11s were having conversations with us, having conversations with Salt, and we didn't want it to be disingenuous where they didn't know that they were actually speaking to two companies that were intending to do a deal together. And so and I also always like to disclose conflicts. It's something, conflicts of interest. And I always like to, whenever I'm saying something, you have the information of what I may have invested into and stuff. So you can, whether to just discount it as self-interest, some kind of bias. But as long as you've got the information to make that. Okay. Right. With that in mind, I've talked enough. Let's bring some people up. Anyone want to come on stage and ask a question? We've got Plan C here. We've got Azad from Bank to the Future. And we've also got Sean from Salt. And yeah, maybe you put your hand up if you'd like to join us on stage. Azad, do you want to?
Okay, we've got Sam. Just connecting Sam right now.
Hey, Sam, can you hear us?
Hey, Simon, how's it going? First of all, thanks for all these spaces you've been doing. I'm a Celsius depositor, and it's great hearing your perspective. I appreciate all the work you're doing on the recovery process. I had a question about FB Bang. I know they did the Series A round last summer. There was talk of a Series B round coming up. I was wondering if you had an update on that, and also if that's going to play in any part of, the potential acquisition with Salt Lending or maybe with Celsius down the road, if you had any insight there.
Yeah, so I can't talk about any specific recovery plans when it comes to, some of the companies in Chapter 11 and that situation. What I can say is FE Bank, I'm a shareholder in. I invested through Bank to the Future. It's one of our portfolio companies. We did the Series A. They're one of our clients that is ready to do their Series B. We've just been waiting for some of our additional approvals to come through. I know that the client relations team have that as one of the companies in the pipeline as they're kind of waiting for us. We've done a deep integration with FV Bank. They've got API-based banking. They're mainly focused on the business side, but our experience with them so far has been great. They're based in Puerto Rico, so they have their US license. It kind of gives them a bit of a best of both worlds with the interesting situation in Puerto Rico. But it looks like that one's going to be a 10x for those that invested in that in terms of paper valuation. So congratulations to anyone that's invested in FV Bank.
That's fantastic. Thank you for the update. I appreciate it, Simon.
Okay.
Thank you, Sam. I believe Plan C has got his hand up.
Yeah, hey guys. Yeah, I just wanted to maybe bring up a talking point for everyone on stage. It's something that I just kind of thought about, and I'm sure other people are thinking about it as well. But there's a motion put forward by Celsius to sell some stable coins, and UCC just kind of tweeted that out. Now, this is like an extremely important talking point for the community because maybe I'm wrong on this, but like I'm just thinking about it logically. Why would you begin to sell creditor assets when you have the company's treasury of sell token that is not a creditor asset, right? Why would you not start to dip into that? I mean, there's actual volume on sell token right now. If that asset is being claimed on the balance sheet as having this $700 million value or whatever it is, why would you not begin to at least slowly sell some of those coins on a daily basis, ask for approval on that? Because that is not a creditor asset. If you want to protect all creditors, why would you start selling stable coins that affects all creditors? And there's obviously a group in the community that's going to very strongly disagree because they have sell tokens outside the app. They're not creditors. They're not in the best interest of the community because they're speculating. And on this point, I don't see a logical argument for selling creditor assets before the company's treasury. That is not a creditor asset. I'd love to hear other people's opinions on this.
Okay, maybe other people want to share that when they've got opinions on that as well. I noticed Thomas is in the room. Azad, if Thomas, maybe he just wants to listen, but we can also invite Thomas up if he wants to be a speaker. It's an interesting question, right? So they originally applied and it was approved in order to sell some of the Bitcoin, some of the mined Bitcoin. But it's really starting to show where this seems to be going in terms of the mind of Kirkland. So they obviously have said custody belongs to those customers that had their funds in custody, and earn belongs to and everything else in collateral of loans seems to pointing towards it belongs to Celsius, and so therefore they're applying for motions in order to fund their business. So rather than traditionally in a bankruptcy proceeding, you go for a reorg, and the most desirable outcome is to get a reorg if you can beat, a Chapter 7 liquidation. And so the whole game is to prove that you can do better than just simply liquidating the assets. Now, that's a bit subjective, especially the more nuanced and complicated. And Celsius is a pretty complicated business, as we've seen in comparison with the Voyager process. The Voyager process is, literally in the final stages of auction. I think the community are feeling, a lot more aligned because they're really just looking for the outcome. They're looking for a new beginning. And I spent some time on some of the Voyager spaces to just try and understand a bit more about how people are feeling. And the sentiment's very different from what you're seeing in the Celsius community. The Celsius community kind of have, it's unfortunate, but it's kind of broken around those that really focus on the cell token, those that believe in me and some of the things that I've said, and those that really are big fans of Alex Majinsky, and really those three things. And then there's also a community of people that saying, "Oh, we just don't really care. Just want the best plan, want funds back." And those are kind of created a bit of division. And then there's the split between those who have earn accounts, those who have loans and want the collateral to go somewhere else or stay there, and those that have custody. And unfortunately, that's creating a bit of an us versus them scenario that sometimes gets perpetuated with different narratives. And Twitter's a very complicated thing. When you've got 140 characters to express something, things can be interpreted in many different ways. We all have different frames of reference, different biases, different experience, and then NDAs where people are subject to certain information and others are not. So and then other people can't speak, and it's just a really not optimized or not ideal scenario. So if you look at what the various things that are happening right now, is that there is a reorg plan being proposed, and the question then comes is how do you fund it? So you've obviously got to file a motion in order to get your plan approved, but in trying to develop your plan, that involves costs, and there's a big cash burn. And so they applied to sell some of the Bitcoins in order to build out the mining operation. The balance sheet that they showed originally showed that was deeply unprofitable, but there's an argument to say that they were just reinvesting in infrastructure in order to build out a much larger operation. And now they're looking to sell off some of the stable coins. Now, the reason that this is pretty controversial for me is because traditionally you would have got dip financing, which is where you go out to an external, they charge you often an extortionate interest rate in order to borrow some money to get out of Chapter 11 and in order to reorg. And they take preference over unsecured creditors because they'd be a secured creditor, which means they would get paid out first. So in this case, whenever all of the clients and customers are unsecured creditors, any secured creditor that comes in would take preference. So it's almost, in a sense, being forced to invest into the decisions that management are taking, which just doesn't feel very nice. But it's the way it is. If you're in this, you're in this, and that's the process. So you have to go with what the process is, or you have to file a motion, and that's the way that it is. But they just applied to sell off the stable coin, which in a sense it makes sense. Rather than paying interest from an external and them getting preference, why not borrow it from the creditors anyway, so that you don't pay the interest? But it's also quite painful because it feels like if you're a creditor, like I am, full disclosure, I'm a shareholder and a creditor, that your funds are being used to force invest. You're not being paid interest, and you're not going to get repaid unless the reorg plan works. So it feels like a bit of a triple slap. But it then also just depends upon your belief in the reorg plan and what comes next. So a lot of energy focused on trying to make sure that there's different reorgs. And there was also, if you haven't been following us closely, there was the leaked recording of the meeting, which came out as well, and that revealed a lot more about the CEO Alex Mishitsky's thinking. I do think that it was leaked in order to get that out to the community. I think that was engineered in some way. That's just speculation, because I can imagine if I didn't have a voice and I wasn't able for legal reasons, and I wanted to try and communicate with my community, that might be, something that someone was thinking about how to do. But that's just pure speculation. But some of the community members were very excited about that. Others are horrified by the thought of having to force invest in a reorg with the same person that they might feel responsible for losing some of their funds. So that's really the different things. But you bring up an interesting point, which is, well, why stablecoins? Well, obviously, ETH has now moved to the merge. So that's like an asset that could actually be used for a recovery. Bitcoin mining, if they can turn that into a profitable venture, they could use that, was one of the original proposals, or they could just use the equity value to IPO, but you'd have to have, I think a reorg management team and a lot of patience to get there. So those are key assets. So then the next asset on the line was probably stablecoin. But there is a really interesting point, which has circulated around Twitter, that they've got approximately $1 billion asset, I think 940 million, and then there's some liabilities. But so I think if you net those off, maybe about 600 million. Sorry if I'm butchering the numbers on their last coin report, that they attribute as reducing the size of the whole. And so if it was worth $1 billion, then in theory, you would have thought because it's the coin that they've got a lot more of than the ones that they're short of, so they're short crypto, why wouldn't they use the token that they're long on? And you can imagine the answer is because it's liquidity, and there's also a movement around there's a community that believes that there's manipulation on the short side, and so they're buying long in order to squeeze out a shorter. And that community, he'd have to sell on to that community, which would be deeply upsetting. And they seem to be, in the last meeting, they said they think about 5 to 10% of their customers would stay with them on a custody service. And those are the most likely customers that would stay with them, the ones that are the diehard, people that love Cell Token, and believe in and want to continue to invest in a future with Alex Mishitsky. So that's why I don't think he would sell. And practically, it would also destroy an asset on the balance sheet that we all know can't be sold for the amount that's showing on the balance sheet. But you're right. There are liquidity seems to be picking up. There's a couple of million of volume last time I looked.
Hey Simon, can I just
Yeah.
follow up with something? Like I just again, I don't want to create more division. Absolutely don't want to do that. I'm a top 200 cell token holder, so I actually have a lot to lose if they started selling cell token. All my cell are locked in the app for disclosure. So this is not in my best interest actually to sell cell token. However, the UCC's job is to protect and represent all creditors. If their job is to protect and represent all creditors, they would be, in my opinion, just my opinion, they should be blocking this because this is affecting all creditors. If you start selling any other asset besides cell token from the treasury, now you're affecting all creditors. The cell token treasury is designed for this sort of thing. Alex bragged about all this money that was here to protect the community in these sorts of events. Why has it not been dipped into? I mean, there's enough volume. There's some days there's upwards of 70 million in volume. They could be selling at least small quantities. I'm not saying finance the entire thing with cell token. I'm saying they should be doing both, probably selling some stables and some cell token, because any amount of cell token they can sell, it benefits all creditors. I don't see any logical argument against this other than an emotional one, because you have other interests. And again, my interests are actually aligned with not selling cell token. But in the interest of all creditors, I think it makes 100% sense to sell. And the UCC, excuse me, the UCC, if they don't block this, that's it says a lot, to be honest.
Okay. I think we invited someone else up. Anyone else got a topic they'd like to cover?
We've got Thomas.
Hey guys. Yo, happy Friday, everybody.
Happy Friday, Thomas.
Sorry, I'm just busy with other work, but I was sort of listening on the side here. So thanks for... Can I just ask a question? Like, is CEL considered a stable coin? I assume when they mean stable coin, they mean USDT, USDC.
Yeah, that's what they want to sell. But Plan C's argument is that they should prioritize selling CEL because it was advertised as treasury to bolster the balance sheet of the company in times of challenge. So the argument is, Bitcoin's a pristine asset, Ethereum is a pristine asset, stablecoins are pristine assets, and everything else is a bit more speculative. So why not sell off the assets that are further down the chain?
No, I follow you.
And they also have a lot, and Thomas, they also have a lot more cell token. They're not short on cell token. They're short on Bitcoin.
They're long.
They're short on every other asset, but they have ample amount of cell tokens. I mean, they have literally hundreds of millions of extra cell tokens on the balance sheet versus all the other assets. So why would you not be selling cell token? Makes no sense.
Yeah, it's the only one where they've got more assets and liabilities, I think, from memory.
Yeah, no, I hear what you're saying. Yeah, they do. They're like double. They're like 2x long. Okay, I'll stay away from that. Can I make a comment about the whole dip financing versus selling stablecoin in general?
Go for it.
Okay, so like you know, Simon, you made a great point, which is when someone borrows money in a dip financing, it has a rate, right? It costs money. So like usurious, okay. Some people say it's it's the cheapest equity ever raised. Some people say it's usurious, right? So the rates can be very high. And so the question I suppose as a debtor you should ask, and as a creditor body, and all the people here are creditors, or most people are creditors, you sort of think like, well, if it costs me 15% or 20% to borrow money from the as a dip loan, and it's going to come in as just so it's clear, it will come in on a secured basis ahead of creditors. Then do I borrow money at 15 or 20%, or do I sell? Let's say they just stick to USDC. Do I sell USDC, and because I'm basically giving up like a 8 or 10% return that I can make from the market there. It's clearly a cheaper version of getting a dip loan. So anyway, in my opinion, just like looking at it from as an outsider, I'm not an insider. That's clearly a better financial decision to basically borrow money almost at 10% than borrow money at 15 or 20%. So I get where it's the debtor that filed this motion. I actually didn't even look at it. I just sort of noticed that everyone was talking about it. But anyway, that's the corporate finance decision. What's a cheaper way to to finance expenses.
Yeah, I'd agree with that. And then, but yeah, there's also an argument if you could successfully sell the asset that was meant to be used for this.
Oh yeah,
Yeah,
true. That's a whole other perspective. I'm just talking about like trying to get apples to apples.
yeah.
Totally. I appreciate that. It's sort of like the debt is sort of pushing you down a path of making you invest in money.
It was a bit of a double whammy as well, because at the same time, there was a motion for delaying the further transparency on the financials. So you get, by the way, you're investing in us more, and we're going to delay the financials, and we need a third delay on providing all the information that's needed.
Welcome to big bankruptcy with the baddest player, the baddest player in the space. Yeah, I hear you.
Yeah.
I'm referring to Kirkland, of course. Yeah.
Yeah.
I'll listen, but I won't talk because I got too much to do. Sorry, guys.
No worries. We'll try not to call upon you, but you're very popular, Thomas, so your knowledge is always appreciated. I think we invited a few more people up. Azad, is there someone else?
Yeah, next is John.
Hey, John.
Hey, I had a question. You said there was someone from SALT on the call?
Yeah, Sean here. We can invite Sean do you want to try and invite Sean in, Azad?
Yeah, I've sent an invite. Sean's listening, I believe.
Yeah.
Okay. Well, maybe Simon can answer my question on this. So it's a borrowing platform. Is it also a lending platform? I mean, I could put Bitcoin on there and leverage it, take a loan out, but can I also put coins on there to earn yield similar to Celsius, except for maybe a successful business model?
So let me try and answer it, and then if Sean wants to jump in, he may be on another call or something, just listening in. But
yeah, Sean's here now.
Okay, cool. Sean, it was a two-way market, but it was done in compliance with securities laws, and so you would raise in batches from accredited investors using that model. And the exciting part about integrating BnkToTheFuture and SALT is obviously we've been focused on global securities laws. SALT is a very US-centric, US-first company, but the opportunities for us to build out the products on a global scale, and also create a security law compliance version of Earn, which is the big elephant in the room at the moment. That's what BlockFi is trying to get through, and that's why FTX acquired them and said, well, we're going to buy you for pennies on the dollar, but get us that license and you might get a few more crumbs. It's kind of what happened with that transaction for BlockFi. So BlockFi is working for FTX to get the securities law compliant part together. It's also probably one of the reasons in the leaked meeting Earn wasn't mentioned, because I can't see a regulatory compliant way of putting together a plan without having focused on the security side. So to answer your question, yes, that's one of the things we're really excited about, being able to do that on a more global scale and put together Earn under securities regulations and lending under lending licenses.
Well, yeah, that's great information. So it's something you're basically working on to bring to not just accredited investors, but non-accredited as well. I was wondering why, as being more of a lender than a borrower myself, I was wondering why I was looking for more opportunities to earn yield in the space. I did stumble across Gemini Exchange. I don't know if you know much about that. And I was just kind of curious, do they have some kind of special license that they're able to do that? Because even as a non-accredited or accredited, you can go there and you can go there and lend. For instance, their GUSD product out and USDC even, and earn some yield. Do you know why they're able to do it?
Yes, so I don't want to butcher it, but from my understanding, Gemini's got a trust, which is like the equivalent of a banking license. So they go for the full-blown banking model, which means that you have additional requirements, and most banks, by default, are able to get brokerage permissions in the security side. I did a bit of DD on them when we were looking at them as they were growing up, and I mean they're a major player now. That's my understanding. But it's not something I could categorically say. I haven't gone deep into it.
Okay, wonderful. Thank you. And then, Simon,
Sean, did you want to say something on what I said? Did I butcher your part?
No, it was well. I think I could just re-summarize it a bit for John, for your sake. So we do offer that, and effectively there's two ways, and then a third that I know people can offer that. One would be having a banking license, which is the ability to let people deposit their coins and give them back interest, which effectively is lending. The other is through securities, and that can be many different formats. Right now, we're still servicing only accredited investors. That can take the form of lines of credit, one-offs, Reg D offerings, public offerings, hedge fund style funds, and whatnot. And we have kind of a few different ways we can go about that. And then the third one would be trust companies and or offshore. So I'm speaking mostly to the U.S. regulations. And if you're interested, I could DM you my email. I'm happy to have a conversation and put you in touch with our folks there.
Yeah, okay, that would be great. Simon, one quick question. I keep hearing about the fact that this pertains back to Celsius and these companies that are in trouble and their assets possibly being sold off for pennies on the dollar. If we have, and that's my question is, if Celsius or one of these other platforms got forced into liquidating their assets, why would they have to sell off to vultures for pennies on the dollar instead of this just being able to go to the market, maybe over the counter, and getting the full price of these assets instead of accepting pennies on the dollar?
Yeah, so you may be confusing liquid assets versus illiquid assets. So obviously, if a Bitcoin is a Bitcoin and it has a dollar price, some might be trying to capitalize on getting cheap Bitcoin. Actually, that happened on the Silk Road auction. The FBI was auctioning off the Bitcoins that were taken from Ross Ulbricht that were part of the Silk Road estate. And they actually auctioned them off. And so I think it was Tim Draper and various other VCs that bought them in blocks of, can't remember whether it's 10,000 or 30,000 Bitcoins. You're testing my memory here. So those types of things happen. But when you go into Chapter 7, you go into auction mode. And auction mode is, taking some of the illiquid assets. And this is what I'm trying to avoid. If I were trying to do some of the things that people are accusing me of, then I'd be pushing for Chapter 7. And Chapter 7 is where a bunch of companies would go into an auction process and try and buy some of the Bitcoin mining operations or the technology, and then the investment bank would run an auction process. But focusing on a reorg, it was one of my original ideas after I realized that Celsius wasn't going to do a reorg because there were disclosure issues. Was using equity as a mechanism for filling the hole and making the whole community shareholders. And so I still think that that's one of the best ways of filling the hole, because only using high risk, high return assets could you potentially fill this, in my opinion. And so, that's where we were focusing on, well, if anything like that happens, give shares to everybody so that everybody benefits from that, rather than kind of what's happening with some other companies where, for example, the BlockFi strategy, they're lending money. FTX lent some money because they had exposure and then got a deep discounted valuation, but that just went on the equity, the benefit for the shareholders of FTX, rather than sharing those shares with all the people that were actually affected by this. So I think the fairest way is for some of the equity to go to creditors rather than it ending up on the balance sheet of a company that just gets on the right side of that auction and happens to be cash rich at a time when everyone else is in a bear market.
All right. Well, yeah, thanks for that breakdown there. I appreciate it. That's my only questions. Thank you.
No worries.
Okay, we got Sean.
Sean Owen?
Yeah.
I think he's a speaker, isn't he? We got anyone
Yep.
that wants to ask a question to anybody?
See, BitShack.
Yes, folks. Good evening, or good afternoon, or good morning, whichever suits you best.
Are you in South Africa?
Yeah, that's true, Simon.
Okay.
So, question for the day. At what point would the court decide that the continuous burn rate is exceeding the possibility for reorg? Is there sort of a mechanism that is used? Because we've got some good figures at the moment through one of the community members that's sort of plotting the whole size or the percentage if a liquidation would occur today. And that figure is sort of dropping by about 5% every 2 or 3 weeks. So that does not really look like there's a lot of time with regards to burning through all available liquid, which would then obviously force a Chapter 7 style liquidation. So at what point? I mean, we started off 30%. We're now looking at more like 40%. And we're going to go till next year. I mean, this is just getting a little bit, there should be some sort of a point where Chapter 11 doesn't really make sense anymore. Is there a measurement?
Yeah, I feel you. And firstly, let's just say that's just someone's model. We don't have all the information to know that. It also depends on the model for valuing sell and valuing the mining operation and GK8, the custody operation. So we don't have all the information, but at the same time, people have information that they can then use to model. So I haven't seen that model, but that's pretty interesting. But I can't verify that if someone's relying upon that. But my understanding of the process is that Celsius have 120-day exclusivity. They indicated in the leak call that they would like to get something done before then, but they'd also apply for an extension. It seems like that would be something they would do, which would extend the exclusivity. And we've got motions that are being filed to implement an examiner, which will take up a lot of resources, I think, in terms of investigating the key questions. And in the last hearing, it was limited in terms of what it would cover. And then the judge added an additional line where what's covered in the scope could be extended. And then there's also talk about introducing a chief restructuring officer. And I think David Adler has also been looking at filing motions with the crypto loan group about a trustee taking over. So these are the processes. Those processes have to be worked. Unless Thomas wants to jump in with another process, those are the only processes I know of, which is have a restructuring officer come in, have the examiner find something. But also remember, if an unviable plan is put forward that doesn't meet regulatory compliance, which is the big elephant in the room for me, and that's where we've been really trying to focus our energies, is ensuring regulatory compliance, because there's 40 state regulators and various other regulators that are ready to swoop, and I don't think they want to see these plans come through. And so therefore, that is where a lot of energy needs to be focused, I think. So, what would drive it to that Chapter 7? I think, I don't know if I'm right here, but I think maybe a trustee coming in would favor that type of activity. I'd like to see a chief restructuring officer, if that could be done in a really good way, to allow for a better result, a more impartial way of getting to a reorg. Whatever's best for creditors. And there's also other politics, which unfortunately non-public information can't talk about, but there's lots of other politics.
Okay, next speaker, Liquid.
Hey guys, I mainly follow the Voyager bankruptcy case. I got a small YouTube channel, but I figure maybe I could try to come around if anybody try to help out a little bit. I'm pretty familiar with the bankruptcies. I dealt with Washington Mutual, Lehman Brothers. I was involved in all those cases. I actually helped form an equity committee in Washington Mutual years ago. So just trying to help out if you guys got any questions.
Awesome, Liquid. Is that your professional career? What's your background?
I'd rather not say what I
Okay.
do, but it's kind of like a hobby to me. I basically vulture invest, buy stuff when it crashes, and then try to get involved. And but Voyager actually was a customer before they went bankrupt.
Okay, cool. And you've been releasing content on. So give us the quick overview on. I think Voyager's in auction right now. There was some release leaked that FTX is the primary person. I can't talk too much about it. So do you want to share what you know?
Yeah. So the sad part is it's basically night and day to the Celsius case, and Voyager is basically at auction. It's been 3 days now, I believe, and they keep overbidding themselves, and we're gonna find out hopefully today who wins that. But basically, there's about 700 million that's missing from Voyager's balance sheets. They loaned out 15,000 Bitcoin and about 300 and some million USDC to the 3AC Capital, and that's where the hole is. So then they filed Chapter 11, and then now they're trying to do a 363 sale and try to sell the company to somebody, and hopefully everybody's made whole. But as it stands right now, we're looking about 70% recovery, and the other recovery from Voyager's current plan would be new stock that they would issue and 3AC claims. But hopefully we get a buyout and everybody's made whole in this case.
Awesome. Yeah, it sounds like luxury and simplicity there. All right. Well, wish you all the best. And sorry I can't talk more about it, but yeah, let's see what comes.
Okay, next speaker is Crypto CJ.
Hey guys, just for a real quick, Simon, and thanks again for doing these Twitter spaces. They've been really, really informative. Really appreciate you taking your time and energy and resources to make this happen. I just wanted to say in reference to this whole proposals that do come from Celsius Network. I don't know if everyone feels that way, but I really feel like the UCC is, this might be a little bit harsh, but I really feel like the UCC is a child playing an adult's game. And I'm not sure if they really understand, the expertise that is Kirkland. And I just hope, like Plan C says, that they recognize that, trying to sell these stable coins in lieu of doing something with the cell treasury is a big 10,000% no go. And I hope that the UCC recognizes that it's a no-go in all way, shape, form, and fashion. And so I also think that people should probably really, really think behind this Celsius Network banking regulator are in this big time. Both the state banking regulators, federal banking regulators do not want anything to move forward with Alex Mashinsky and a reorg at all. And I hope people just begin to understand the reality of the situation. He didn't make any friends. It was a big fight. He tried to take them on, but ultimately, just look to interview Kate Long. The real enemy for anyone in the digital asset space is the banking regulators. It was big players. Celsius was one of those big players, and I just don't see anything at all, anything possible moving on with any type of reorg. And definitely, I hope everyone does look to that petition. I forget the Twitter guy who put out that petition, but I would certainly hope that it would be reaching out to the UCC and vote, just a big no on trying to sell those stable coins. And if they want to do anything, they should be selling those self tokens. Thanks for letting me share.
Okay, appreciate that. Azad, who else have we
got? We have Dude.
Yeah, thank you for the opportunity. I wanted to ask Simon about the issue that the last speaker just raised about the selling of the stable coins, which is obviously depositor assets. Is there something that would prevent Celsius from using the Cell token? And I mean, other than the fact that it's maybe illiquid and they couldn't sell a whole bunch of it, but couldn't they raise some funds that way, or is there something preventing that? And then obviously, most cases, I was involved in one of the largest bankruptcies in the history of the world, which is WorldCom. I was an executive there, and they obtained debtor in possession financing, DIP financing. Why wouldn't they do the Cell token and or the DIP financing before they would sell the assets of the depositor? And then real quick on the second thing, I don't know if
Should I just do one question and you can do the second one?
Okay.
I always forget the question when we do them in groups.
Oh, okay.
So we did cover it, but you might have been a bit late to it. Essentially, DIP financing would involve borrowing money from an external party that would become a secured creditor. And because we're all unsecured creditors, the DIP financier would get preference over us. And so essentially, you'd be introducing an interest rate for the DIP financier, which would be more expensive financing than simply getting it from the unsecured creditor's assets. And so it does make financial sense to do it through stablecoins. But at the same time, Bitcoin, Ethereum, and stablecoins are the pristine assets here that I think should be protected at all costs. There is, I understand, I can empathize with the argument that there's only one coin that has more assets value on their balance sheet than liabilities, which is Cell token, and that was meant to be the purpose of the Treasury. So there's an interesting argument around that. And then just taking the counter, why wouldn't they? Probably politics. So, Alex's call revealed a reorg plan that involved custody for the 5 to 10% of customers that they believe would stay. Those are predominantly people that own Cell tokens. And therefore, I think he's making a bet on his future customer and selling the Treasury on them when they've been working on fighting those that are shorting the token. Is kind of a bit of a Game of Thrones scenario where their future customers are trying to fight those that are shorting the token in the short squeeze, and then for Celsius to come along and then sell on to those people might destroy their relationship with their future customer. So I think it's just literally politics in the reorg plan, which really isn't what is the best for creditors, I don't think. So I think we need a realignment of what's right for creditors versus what's right for, who they think the future customer is on the 5%. And that also depends on what the actual reorg plan is, because it's conjecture at this stage.
Hey, Simon, I just wanted to add one quick thing. So all the UCC has to do is go to Alex and say, look, Alex, you used to sell daily on the Celsius community. How much can you sell daily without crashing the market? I mean, Alex is extremely experienced in this. He used to sell all the time, right? He knows how to sell without crashing the Cell token market. He's experienced. He should know, like, you can sell 5K Cell tokens a day, 10K, whatever the number, whatever amount you sell from the Treasury benefits all creditors. And that's what the bankruptcy process is about. Politics aside, emotions aside, again, I have a lot to lose if the Cell token price goes down potentially in the future. But what's best for all creditors is to figure out what they can sell without crashing the market. And if the price goes down a bit, the people that believe in Cell token can buy it and get a better price. So I just don't see, anyways, I don't want to belabor this point, but yeah, that's, again, I'm not saying dump millions of Cell token from the Treasury. I'm saying figure out how much you can sell based on the liquidity and sell whatever amount you can sell, because that benefits all creditors.
Okay. Crypto BTC, I think you've had your hand up for a while.
Yeah, thanks for calling on me. Mr. Dixon, my question really is with regard to the Cell token, and I just wanted to see if you could provide clarification to the community as to what your position with regard to the Cell token is like. Because previously you said it's a security, and now in some of your tweets you're suggesting that it be sold. So if it is a security, how can it be sold, and what broker-dealer will have to enable that sale? Can a court order an unregistered security to be sold?
So the position is that a buy and burn token, from my perspective, there's some people that have successfully said that it's not a security, and there's others that are. Sean would have a lot of experience in this because he got on the wrong side of this, and others have got on the got around that. But there's a regulatory area where the SEC often picks winners and losers based upon their time frame of enforcement. Now, the SEC have announced that they're expanding their team rapidly. And so, therefore, they're putting a lot more resources into this. And Biden's political agenda is to embrace this market in terms of regulations and consumer protections. And so there's maximum political will to figure out exactly what this is. And that coincides with this is a major, major case where the whole world is watching in terms of the future of crypto. So I think that would have to be determined by the court, and whether they could sell those sell tokens on the market. I think it would be a very controversial subject, and I think it would be just as debated as the custody versus earn and that type of thing.
So in your view, in your personal, is the sell token a security or a cryptocurrency?
I think in the US, I think it would be deemed a security in the US. And then I think it would, outside of the US, it depends upon whether people are going to get hurt, whether regulators start enforcing their securities laws, and whether they have a virtual asset service provider regime, which is happening jurisdiction by jurisdiction at the moment in order to gain clarity on how virtual assets are treated versus securities. You'd want a simple answer. The answer is it depends on the regulator if they want to try and get enforcement action on someone that's been hurt a lot.
So if it is considered a security, can the court order Celsius to sell the sell token on Uniswap? Because there is no broker-dealer outside. There's only outside the United States. Inside the United States, there is no broker-dealer that does provide services for the sell token.
No, so if the court simultaneously deemed it a security and then ordered them to sell, which I don't think they would, it would be Celsius having to apply a motion just like they did stablecoins and then trying to get permission to sell. They'd probably want transparency on that so that the market, and then that would create a wave of market manipulation as well from people knowing those numbers. And whether there's market makers, all sorts of shenanigans that can happen because it would be on a crypto exchange. But then if it was deemed a security, then it would have to actually be listed on a security token exchange, which would probably ruin all of the liquidity. And therefore, it would be an unviable strategy if it were deemed a security.
Okay, and can I ask a second question with regard to, so in one of the interviews that Mr. Mashinsky did with you, he shared this, and I'm quoting him, if there is any model in crypto today that we're close to, it actually is BNB because Binance did a great job. Do you see any value in crypto companies having their own tokens, similar to how Binance has the BNB token? And do you think the BNB token would be as successful as it has been if instead of fostering and trying to create utility for it, CZ used that token to just dump on the community, as you're suggesting Celsius and Mr. Mashinsky do in your recent tweet?
Sorry, I think there's confusing a few different topics there. So let's try and get the first one. What was the first question? And then we'll do it one by one.
Yeah, so the quote by Mr. Mashinsky in his interview was
to BNB.
Yeah, he wanted to replicate the BNB Binance model.
Yeah. So BNB is a top 5, I think. I can't remember the time I looked. Definitely top 10 cryptocurrency that made Binance one of the most successful companies in our industry and one of the fastest growing companies in our industry. It is both an asset and a liability because it grew so fast. It gave them an incredible, immense amount of protection power. At the same time, there's only, in the early days, there was only one exchange that would list it because when you apply to have a token on Binance, you have to prove it's not a security. So you have to actually say that it hasn't got a buy and burn, it doesn't have a dividend, it doesn't have it's not based upon the management. Well, all of the things when you list a token on Binance, you have to say that it won't do anything that BNB does in order to get it listed. So Binance was the only one that could list their own token originally. And then as it became such a force, more and more crypto exchanges became more and more comfortable with it. And then it got listed on more and more exchanges and just had this incredible success story due to the growth of the company. If anyone can pull that off, you could become the next Binance, and several other exchanges have. And it's an incredibly powerful tool to have. But it also gets you a lot of challenges, and Binance has a lot of regulatory challenges, but also has the money in order to combat them, and can often combat, through political will by saying we'll set up a portion of our company in your jurisdiction. And so it's really reached that stage where it's kind of like a bank, where it has this relationship between those that have money and those that have power, and kind of can buy their way into political will in countries. So if you can do that, that's the exact same success strategy that the banks had and use today.
Hey, Simon, can I really quickly speak on this topic just because I think I can help out as well? I've been a huge advocate for the Cell token for the last 2.5 years. I said on multiple spaces with Alex, why can't you turn Cell token into BNB? I asked him this many times. I said, what are you guys doing to work towards a BNB-like model? And like, again, you can say something, but it's another thing to do it in practice. Celsius has had over 3 years to do something with the Cell token to work, towards a BNB token model. They just came nowhere near it. I'm sorry. Like, I was one of the biggest advocates for Cell token. I really pushed Alex to add utility. The burn got added because of me, because I was just went nuts for a month on Twitter and Telegram. But you just have to, at a certain point, say, can they replicate what BNB's done? I mean, BNB created their own chain, which is what I suggested, as well as other community members. So for people that have been here for multiple years, like, we've been pushing Celsius to improve the Cell token, right? The people that are attacking me now are like saying I don't care about Cell. I'm a top 200 holder. I was one of the absolute biggest advocates for Cell token. I wish it would become BNB. I had models around it becoming BNB and what it could become. But the current management neglected it, and they just chose to go a different route. Now they want to backtrack and try to do it. Okay, should we give them another chance? That's the question the community should be asking.
So Planty, I'll take the other side of that, and Sean can chime in as well. He's got his hand up. It is such a risk for a company to do. I verge on the conservative side because, the co-founders of BnkToTheFuture are very legal, compliant. Bliss Dixon has implemented a lot of the processes to always make sure that we have survived all of these markets. And the token is such a challenge for the business. It's the greatest asset in the world when Binance pulled it off. And I was actually at the conference in Chengdu when he pitched it. So I was at the original pitch with CZ. It's an amazing asset, but it can also, Sean has the experience of what happens when a regulator decides that I think Celsius and BlockFi got through because they didn't have the experience that Sean got, even though he was first to market. And that was because what happens when the token's wrong. So if you look at the model now, I understand why Alex might have pushed back on that, because it's really, really challenging because you put yourself under fire by regulators as soon as you do it. I don't know if you want to chime in on this, Sean. I know that there's certain restrictions that come with some of the things that you've been through.
Sure. Yeah, there's definitely some things I'll just avoid talking about. But really, to go back to where this started with Plan C, bringing up a first question, it's my guess, just to answer that first question that'll lead into the one that was just asked, that if you were in the room with a whole bunch of lawyers and everybody in the world watching this case, I don't think that it would be possible or prudent for anybody to advise, selling something unless it's explicitly defined what it is. And that's probably the issue. It doesn't mean I'm saying it's right or wrong. I'm just saying, if I were guessing, to your point, why haven't they just sold some, or why couldn't they just sell some into the market? Well, sure, technically speaking, that's probably totally possible because they were doing it before. I'd guess that they've paused because there's now a whole bunch of questioning saying, well, what is this? Is it or is it not a security, for example? To get into the next point, I think a lot of times people just really probably haven't looked at this from the standpoint of doing the tokenomics and then putting it on a balance sheet and then putting it through accounting firms and people who may not understand what's going on, and then sending out tax statements to all the people involved and income statements, all those things that we're all used to doing every year in the US and other places. And then if you don't have every one of those questions answered, there will come a point where you have to answer those. And so take BNB for an example. I think if you took the model of BNB, which many have attempted to replicate and or were first before them and just weren't able to kind of take it to the scale they have, put it inside a business entity from scratch, and then start issuing it with the intent of every transaction going on to a set of QuickBooks or whatnot, and you find that it's not impossible, but it's really important that you match both sides to the transaction the way that you would have to tie it off from an asset and liability on your cash flow statement, your balance sheet. Simple example of that would be if you're holding as an asset on your balance sheet and you're selling it in a way that there's some discount on it when you use it as a currency or a coupon or a gift card, as an analogy. Now you kind of have a weird paradigm where you've got a deferred liability event potentially that's a liability. So which one is it? Is it a liability or is it an asset? And how do you account for that discount? Is it just getting written off into thin air or not? And when people receive X amount of it and redeem it, what exactly was that? And did they have to pay taxes on it, or was it income? And so just complicated. I don't think it's impossible. And I think it's a great model from tokenomics, exactly how you displayed, but there's it would not be the place to want to just suddenly take action if you're in the middle of all of this other trouble already. That's my guess.
Yeah.
Hey, Simon.
And yeah, sure.
Hey, I just got a question for you, if that's okay. I have been a private equity investor on BnkToTheFuture in Celsius, and I was just wondering, is that totally gone now? Is there any possible future for that? I haven't been able to get any answers from anyone.
Yeah, so unfortunately, Alex and the team never gave us a shareholder update. So we never got a shareholder update since the round. And then we were working on the due diligence of the Series B, and for obvious reasons, that never got to the final stage, as already covered. Recently, there was a motion filed by, I'm not sure if motion is the right word, but by Kirkland. And that was the co-founders, I think Alex and Daniel, filing that their shares in Celsius are worthless, and they were probably doing that for a tax write-off. And so the existing management is thinking of those shares as worthless right now from a tax perspective. And if they're doing a tax write-off, they probably believe that those shares are worthless. But until we get the results of the Chapter 11, we'll know whether those shares are worthless. In my mind, those shares are worthless. We have $170 million assets in our assets under administration from the value of those shares, which was marked to market at the Series B round. We're thinking them of a zero, but we have to get the final confirmation before we can change a number to zero.
Okay, so you never know.
Unfortunately, sorry for your losses. Hopefully you're diversified, and it's a game of private equity.
Yeah. Okay, thanks for the answer.
Thank you.
I think Thomas had a question. Thomas Brazil?
He hasn't got his hand up anymore. There's a couple of others with their hand up.
Okay, so we can put your crypto doctor.
Hey guys, thanks for that. I think Sean touched on a few things with the cell token, but one point that I have is that the company can't sell too many; they would flood the market. There's only about 6.7 million on exchanges right now, and 1.8 I think are shorted currently. So, I mean, how many could they really sell before they wreck the market? I mean, it'd be like Luna Classic, 2-3 months ago when that went to zero, they'd quickly flood the market to zero. So even though I understand the motivation that PlanC and others have had, I hold them as well on the platform. I would gladly sacrifice my cell token if I meant I would get my Bitcoin or my Ethereum back. But there's just not a market for the hundreds of millions of cell token that Celsius holds.
I'd add one thing to that too, because it's a point I was going to make before. I think the first thing I would be concerned about is what happens if I drop the price of this and it triggers more loan collapses for margin calls or anything else related to the loans that are already existing. Like that would be the wrong thing you'd want to do.
I didn't consider that. That's an excellent point.
There's no loans on cell token remaining. It's extremely low. The amount of loans against cell token is less than $1 million, and it's not. And the price would have to go extremely low, I believe. I don't even know if there's any loans against cell token currently.
I do not know, so it would be news to me. So I'm simply guessing. And thank you for that.
They did say there's less than $1 million, so I do know that. But I think it might even be zero.
Were there many like before? Were they all liquidated or?
They've also paused liquidations too.
Yeah, but no, I know, but this was like months ago. So there was a statement made months ago that basically the order books have been wiped out on the loans. So there was so many liquidations. I mean, the price went down to 10 cents, right? So there was all the liquidations or loans closed on Cell token. As far as my understanding, they made a statement saying there's less than $1 million worth of loans against Cell, and I think it might even be zero now.
Well, let me give you another one. I don't know that it's clear. Let me put on the hat. Say I have Cell tokens in my account right now, and I don't know what I'm going to get as a claim on that. Am I going to get the dollar value back? Am I going to get the coins back when the all said and done? And so I would imagine if I were a lawyer, I would say, well, I don't know. That sounds like a lot of maybes. Why don't we just not touch selling that or doing anything with it until we solve it? Because the implications are all over the place.
But that's the same for any token. You could say any token, you don't know if you're getting it back in kind or in dollars.
But my point being, if they sold Bitcoin or stables, that's not going to affect probably the price as much as if they sold Cell because of the liquidity.
Oh, I 100% agree. That's why they'd have to figure out how much can they sell without crashing the market. Maybe it's only 5K sell a day. Again, this might be too complicated. Sean made a really good point about legal stuff, but my argument is just whatever they can sell benefits all creditors. I'm not saying they dump millions of Cell token from Treasury. I'm saying maybe they sell 10K a day, 5K a day. Alex used to sell 20K a day.
Just think of it like this, though. If it were deemed a security and you go sell it, then there's this potential that it's a publicly registered one or should be, and then there's potential for insider trading and breach if you don't communicate it properly. And there's just all these things that I'm not saying are true or are not, but would be called into question before I'd be able to do that and make it really difficult.
Yeah, and that's the reason why they're not doing it. They would have got the advice.
Yeah.
Plus the politics. The plan is to support the percentage that they think 5 to 10% are still their customers, and they don't want to. I think their real plan is to try and get them as their customers. Okay, let's try and see if we can cover a non-Cell token topic, if possible. Does that lead to any hands down?
Let's get Tony, who's been waiting a while. Tony, can you say hello?
Yeah, hi, Azad, Simon, everyone.
Hey, Tony.
Can you hear me?
Can hear you well.
Okay, great, thank you. My question probably will come over as a bit naive, but it seems to me there's when you look at what's happening with Voyager, what's happening with Celsius, there seems to be quite a lot of positivity from people who were involved with Voyager. and a lot of negativity with people were involved with Celsius. And there seems to be a sense of more willingness to work with the process on the Voyager side. And it seems to be more of a sort of mixture of incompetence and chicanery, really, if you want, from Celsius and Alex. And I'm just wondering, is there, I mean, each case is obviously different, but is there any sense in which the precedent of what's occurring on the Voyager side of this whole fiasco, if you want to call it that, could be applied or put pressure onto Celsius in terms of cooperating with the process? Or am I just being completely unrealistic?
No, I don't think you're being. It's not a stupid question. It's a really good question.
Thank you.
So, what is the key difference? Well, my opinion. Again, this is just opinion. Firstly, the mistake was pretty obvious with Voyager. They just lent a shitload to one counterparty that went bankrupt. Okay. They also didn't go across YouTube telling everybody that everything's okay, as far as I know. And so they didn't have their business development team contact, companies like us and say, can you get more money from your retirement plans? And so these upset a lot of people. On the flip side, the CEO of Celsius was a very public figure with a big personality. And that was one of his greatest assets in building a community, but it was also his personality made a lot of enemies because he was a very confrontational style of acquiring customers by saying it's us versus them and everyone's the enemy. And so that's created politics. And if you look at the Chapter 11 filing from Voyager, it was just a lot more simple versus the Chapter 11 filing from Celsius. And when you have, personality-driven tribes, you get people that will live by the sword, die by the sword, for whoever they think is, in line with their ideologies. And so that has created that. And, I'm a bit of a personality, very different to Alex, and he's a personality. Some people warm towards Alex more than me. Others warm to me more than Alex. And then other parts of the community, like, I don't give a fuck about Simon or Alex. Let's just focus on the point at hand. And unfortunately, that is the situation. And because if I wasn't a creditor and I didn't have millions on the line and I didn't get direct messages from hundreds, probably thousands of people right now that were asking me to support them, maybe it would be a bit more straightforward. If there weren't all these regulatory issues, if the regulators had simply done, really, rather than waiting for this to be a huge monster, contacted the companies earlier. Like, I think, again, I don't want to. There's a lot of things when you're dealing with regulators, you sign up to not say certain things. So it's a very tricky subject because you want to defend yourself, but you actually can't even talk about it without creating a further issue for yourself. A bit like the situation now. There's certain things I'd love to say but can't say because it will cause more issues and harm the process. So those politics kind of exist, and that's just the reality of the situation we're in right now. But I do think one thing Voyager will do is it will firstly set a valuation precedent. So whatever the result of that auction is, that will give us an idea of a company with this many users that had this type of business is being valued at this. I think that's a useful bit of information. And it also puts a lot of pressure on, the Voyager community does feel a lot happier with the process, and they're just, they're getting through this. They know what is the next steps. And half of the frustration with Celsius is the uncertainty, the unknown. You can deal with things when you know what the reality is, but the uncertainty drives you insane, right? And so I think a good degree of the community are like, also very, it's a bit like the block war debate. When we had that, it was such a frustrating moment in Bitcoin's history when we were all aligned on the banks versus Bitcoin. And then suddenly Bitcoin became this huge thing where banks were coming into the equation, investors were there, traders were there. It was less ideological. And then we all had different ideas on whether we need to focus on decentralization or whether we need to focus on scalability and lower fees for user experience. And it created like this horrible moment in Bitcoin's history. And then it was resolved. And then everyone moved on. They went off to different communities, and everyone just worked on the things they were happy with. And I think the same thing will happen here. Unfortunately, it's divisive. Money, and when it's such hyper accelerated with things like you're a pensioner and your life savings are on the line, or you've sent a bunch of affiliate links to all of your best friends and family, and you feel responsible for that, that can drive people into really, really catastrophic states of being. And then these spaces, I think they've been a great source of the community. People can find the space where they can align with the ideology that helps them the most. And I think that's a good thing, because we're a diverse group, and I think everyone should have a place where they feel welcomed. At the same time, the arguments people are just like, oh God, I just want my money back. I don't want to be involved in all this politics. And it's driving people nuts. And that's just the process, unfortunately.
Yeah, I mean, for sure. I'm sure a lot of us are in very dark places right now in terms of all this. But just in the here and now, as far as these two cases are concerned, so you do feel that the outcome of one will influence the outcome of the other. I mean, I don't know how the timeline works with this, whether or not there's going to be an announcement from Voyager first or from Celsius. But if there is quite a positive, as the gentleman earlier was saying, he was talking about people are thinking about in and around the 70% recovery area. So you do feel that if that does come to pass in the Voyager case, that could influence both the case itself and also its outcome.
Yeah, I think it's been a huge asset to the Celsius community.
Yeah.
That simultaneously there's been this much smoother process.
Yeah.
Where people can just see the difference, and
it's given us a sense of how a cooperative outcome with the players actually, wanting to resolve equitably, how that works out. And then this sort of, I mean, I'm on the Celsius side, sadly, so I'm kind of going through the pain of just seeing people who are just trying to, use every kind of chicanery and obstruction possible to get them out of actually doing the right thing. So I'm just hoping that you're right, Simon. I do probably in darker moments a bit more negative than that, but that's really good to hear from someone obviously as well versed and experienced in the space as you. So thank you for that, at least.
Yeah, I completely agree with you, Tony. And we'll get through this together. We're in the same boat.
All right, cheers.
Okay, we got Celsius Loans next.
Hey, thanks, Simon. Thanks, Azad. I know we don't want to talk about the Cell token. I don't want to talk about it as a short squeeze, but just as the Cell token is on the balance sheet. Everyone has seen the latest coin report. It's the third iteration. It's still incredibly difficult to read. I think we would all like to see a more user-friendly understanding of the liabilities and assets. But from the most recent coin report, we've seen that with Cell assets, they've got $930 million of Cell assets matched up against $394 million in Cell liabilities. So obviously about $534 million of Cell that's not owed to customers. You gentlemen hit on the pros and cons and pitfalls of trying to sell a Cell token to continue operations. But my concern is just if the Cell token continues to increase in value, how that is potentially going to manipulate the balance sheet and give an appearance of solvency on a token that is Plan C is mentioned, or others have mentioned, that in my opinion, if somehow gets opened up and the liquid treasury is there's able to be sold, I think we all know that that token is artificially inflated and it'll completely tank. So I just want to get your perspective on the Cell token valuation, how Celsius is using it on the balance sheet, and if it's mislabeling what the assets and liabilities are overall. Thanks.
I mean, I'm happy to give you some insight on that from my thoughts on it. It's to be determined. We'll all know eventually. But if you're doing the deliberation, it comes down to, on either or. I think, for example, nobody keeps a value on their balance sheet for common stock that hasn't been issued, because that hasn't been issued yet. And when you redeem it, it goes back into treasury, which is kind of out of the equation. You have it authorized, but it hasn't been issued, and so you don't give it that value. And so if it's a security contract that's different than that, then it can get interesting.
Okay.
But it ultimately comes down to, you would need to most likely have a way to support liquidity, i.e. market making through some type of formal exchange or in the market, and have that all be disclosed and or supported. Or you got to rewrite it from an asset off the sheet or to a liability or whatnot. Like, that's where I think it's confused. And again, I'm not putting out there a positive or a negative for anybody, because I don't want to get any hatred from anybody that's holding a Cell token. I think that's just the challenge that has to be figured out.
Yeah. As two companies that have dealt with these issues, in Celsius defense, it is very, very complicated putting together a crypto balance sheet without accidentally misleading. And so I do empathize with the complexity of that. At the same time, I do think they are involved in a transparency process, and there is an element of stalling where it has to take 3 iterations to get to the information that everyone needs. And this is where I first upset the Cell community. I was doing pretty good until I put some tweets out about this. And I said, if I had my way, we would just take Cell off the balance sheet and we wouldn't have to deal with any of this. And if it were a security, then it would be on a security token exchange and get delisted. And then we could just move on. And those tweets have been, interpreted from the perspective of people's experience, when I was trying to tweet those from the perspective of understanding accounting and regulatory challenges, having been through what we've been through and what Sean has been through at Sol. And so I understand these. If I hadn't been involved in these businesses, I wouldn't get any of this shit. Like, it's taken me 10 years to get this far just to understand some of these nuances, and they're still complicated. So, there's a two-way argument to this. I can kind of see the complexity, and at the same time, I can see exactly what you're saying. That's why I think the best place for it is just get it off the balance sheet and figure out how to create transparency of the whole without it. It is the best way of dealing with it from my perspective.
Yeah, and the only reason I bring it up is when this original community first plan got rolled out and I read about the plan had...
Sorry, I pressed mute all accidentally. CryptoLex.
Yeah, no worries. So when the community first plan originally got rolled out, I read the plan, and it said in the community first plan that all liabilities would be converted over to the Cell token. I found that very interesting, just because from the perspective of retail loans, overwhelming number of loans are Bitcoin, ETH, a couple other coins. But under the community first plan, it had all crypto collateral, which is a liability on the on the Celsius balance sheet, converted over to Cell token. So I'm just wondering how it's going to play out, if they're eventually going to use stablecoins to continue operations. There's about $23 million for that to continue operations. If this process gets dragged out, then are we going to switch over to burning Bitcoin? And then are we going to switch over to burning ETH to the point that all we have left is Cell token?
Yeah, that's my fear.
Okay, I appreciate the time. Thank you, gentlemen.
Okay, next we have AE.
Hello. So actually, I first just want to say thank you to Simon. Thank you to Thomas. Thank you to Plan C. Wealth of information, hosting all of these events, answering questions. I have learned a lot. Probably helped me keep my sanity in the early days. So thank you. I appreciate it. My question for Simon, and I'm a depositor. I have crypto. I don't have any equity. I'm an accredited investor. I have some money on the platform, more than I should have. It's not gonna kill me, but maybe it's about a year's worth of savings. My question to Simon is, once the 120 days have passed and Celsius files for an extension, what will BnkToTheFuture and what will you do, Simon, to make sure that he doesn't get that extension and to forward your plan, which I support, which I'm sure I'm going to support. I don't know the details, but I'm sure I will support.
Yeah, I'm having to give you the cop-out answer that you're going to hate. I'm unable to comment.
All right, fair enough. All right, so another question. If Alex and the other Celsius owners, management, if they were able to claim their equity as worthless, then does that mean that's kind of confusing, because I had thought that you can't do that until the process is finished, until it's completely dead. So it's if they're able to claim their equity as worthless while it's in bankruptcy before it's been liquidated, can we as creditors claim our crypto as a loss for tax purposes?
Again, not tax advice, but I think the equity is pretty, the fact that the co-founders have said it's worthless, that's a really indicative indication of how they see that there's probably a new co coming, and the old co doesn't exist anymore, or won't exist anymore after Chapter 11. That's how I interpret it. And so they want to get their tax write-offs there. Now, the crypto, the claims, I don't think are worthless. In fact, you could sell incoming call. You could sell it to an investor for approximately 25 cents on the dollar. So there is a market for that. And if you've got a custody account, there's people that are willing to pay more for that as well. You might want to mute yourself if you've got the phone going. Yeah,
I did.
Okay. So I don't think the claims are worthless. So don't confuse the equity with the claims. Those are two very different things. So claims do have something that in the market is worth a quarter of at the least. I believe it's worth at least 50%, even if we go to Chapter 7. Long are they going to take on getting to a reorg? Regulators then disputing the reorg, all the things that I've been trying to prevent, and so those will be the determinations of how much is left from that, and then hopefully as a community we can create some valuable equity, and the creditors get to vote on what that equity may be, and then there's the potential in a high risk high return basis to try and replicate what we did with Bitfinex, where it was a massive winner for everybody.
Okay, next question. Next speaker, Annabelle.
Hi, good evening, good morning, wherever you are.
Hey, Annabelle.
Hello. I just want to say, I don't think I have a particular question. I just want to say thank you very much for providing the community with somewhere to share their questions. As an investor in Celsius, it was extremely shocking to me how I followed every AMA from Alex, like for 2 years, I think. And then for the Celsius AMAs to just disappear was extremely alarming. obviously, and that was when the news broke. So I just want to say thank you to all of you for continuing the communication channel, even if there is nothing to concretely agree or confirm. I just want to say thank you. And there has been a lot of talk about the Celsius token on this, one of my very first Twitter live AMAs. And I just want to say that the Celsius token I only bought because of the incentive of the higher interest, I guess. The higher, we were incentivized to buy more sell in order to get a higher return on our investments. And so I think, who knows what's going to happen, as you all have very diligently and eloquently and articulated. But that is a big deal. For me, I'm not one of these chasers of price of a token, but I am concerned that for at least 2 years, it was sold to us that buying that token, we got extra perks, we got extra interest, extra rewards on our tokens.
Yeah. Hey, Annabelle, can I ask you a question? Are your sell tokens held on the app or off the app?
On the app.
Okay, so from my perspective, you have a claim. A model needs to be figured out for how to price those tokens. But if you hold them on the app, you are a creditor. You're just like everyone else. You have a token and you have a claim, and you're trying to maximize being made whole. That's completely different from my perspective to those that have the ability to buy and sell tokens off the app. And so I think there's a two-tiered market, and that is sell tokens on the app and sell tokens off the app. The debates really started when those that had them off the app, they had liquidity and they also wanted to be treated like someone that had a claim. And I think your story is the same situation for many people. And you have every right to maximize the claim and be treated just like everyone else. And the Chapter 11 is designed to try and make that equitable. And from my side, there's no plan that comes forward that penalizes people in your situation. And so there should be a reorg plan that reflects, exactly the story that you've just told, that I think many other people will be able to tell. And I don't think that should be confused with people that are kind of in a different battle, which is, people trying to make money off the token crashing, and people trying to combat those people. And they have liquidity and they're speculating and they can come in and out. They could get wrecked. They could do really well. They're not the same people as you. So hopefully you've understood that distinction.
I have. I didn't even realize there was that distinction, and that just, gosh, the spider web of the situation just unfolds every day as I learn more.
Yeah, and so from my perspective, I'm fighting as hard for your value in sell on the app, just as much as I'm fighting as hard for my Bitcoin on the app as well. So don't get confused with the other politics that is happening outside the app. And I know it's confusing, but yeah, you deserve to be treated exactly as everybody else. And in fact, you were equally well. You were sold more into the concept. And because you were attending those AMAs every single week and you were taking actions based upon what you were being told.
That is my concern. My concern is I don't understand how a group of executives who have potentially mismanaged a company so violently are asking for another chance, I guess, in legal speak, to restructure, to rename the company, to do different things. This to me is bonkers. It's a bit crackers. And I don't understand. I know we have to go through the legal process and we have to go through the steps, but I don't think there would be maybe a 1% chance that people who are invested in Celsius would want that to continue. And it does seem a bit crackers to me. I'm very pragmatic. I believe in the process. I trust in the legal process. I know it's going to be hard. I know it's going to be arduous. It's going to be very time consuming, but I think we're going to come out okay in the end. I absolutely do not want those guys that led Celsius to be in charge of the company again. I mean, I just don't. I mean, that for me is bonkers. I'm very happy that you guys have given the information you've given. You have been very accessible, very timely with your updates, very reassuring. I really do respect that from you guys. I do not want the existing executive management team of Celsius to ever be in charge of the new whatever they come up with, ever. I don't.
Yeah. Thank you very much for sharing that, Annabelle. And it's, stories like yours that in my darkest moments, when I'm thinking, why the hell am I doing this? That I remember why I'm doing it. So thank you for sharing that. And these AMAs are helping me as much to have the motivations to try and continue through this pain when, quite frankly, I just want to get back to writing my book, which is what I was doing before this whole thing. We are where we are, and I think that there's a big thing that comes from this. To give the counter story, I just don't want to be one-sided. There are a community that believe that the existing management were attacked by bad actors, and they believe that they believe that this was a conspiracy to take down Celsius, and some people believe that I was involved in that process. They have their version of events, and they kind of have every right to have their bias about who the existing management are, just as much as we have our bias around what we think happened. So I just want to make sure that there is two sides to this story.
I agree with you. I agreed with them at the beginning of this whole debacle, but as it's gone on, actually, I have made up my own mind, and I don't think that you are part of that conspiracy, although I did in the beginning. I must admit, I have to say I did.
Annabelle, can I just quickly say, so I actually initially I did a 50-post thread about a potential attack, because at the time I had no clue that Celsius was insolvent, and I actually was putting pieces together, and I actually thought there was an attack against Celsius, or at least it seemed like there could have been. So I was and the post went very viral because the community retweeted it. And so I didn't start the sell token squeeze at all. Absolutely did not start the sell token squeeze. But a lot of the philosophy around the sell token squeeze and Sam Bankman-Fried and the involvement actually came from my original thread that I did that got a lot of traction. And then there was a $20 million reward that was put up. Just so everyone's aware, nobody came forward to claim the $20 million reward for an attack. There was actually 0 people that came forward to claim that. So there's no evidence to date that there was an attack. I'm not saying there wasn't, but there's no evidence for it. And once we became aware that the company actually was insolvent, all the mismanagement, I changed my opinion based on the new information. So just so everyone's aware, the idea behind the sell token squeeze actually in large part originated because of my posts and my research, which I've completely reversed on because of new information, just so everyone understands.
Yeah, and to add to that as well, there's two sides to the story. Everyone's got their version, which makes sense to them. I've forgotten what my point was, actually. I was going to say one more thing, but I've forgotten it now.
I've got one thing to add to that. I think just generally speaking, it's healthy to everybody to remember, we're talking about a ton of different employees wrapped up in this too. And it's very granular and very nuanced, but imagine if you had just started somewhere and you're doing the best you can and you're excited. Like, my point being is, I think we need to all be very careful not to jump to generalizing people into a bucket, or stereotyping, or starting to slander or call names, or be too aggressive when we don't have the facts, because at the end of the day, these are people, we're people, everybody here involved is part of this one way or another. And we've all probably done stuff that we've had to learn the hard way. I know I have. And when you're in those situations, you need some time to process and some ability to separate everything out and let the smoke clear, but you also need a plan to get past it and learn and become better for it and move on with our families and our lives. And so I just worry sometimes, or I at least feel compelled to want to put it out there. There are great people that I know personally inside that company that were doing the best they possibly could and probably had no part in this in any way. And they're just subject and victims, just like everybody else, possibly even worse if they're sitting on vested tokens and something they never even got. It's possible. So that's my 2 cents.
Thanks, Sean. And the truth probably lies somewhere in the middle. We all, I can have my moments where I get extreme to one side, and others, I know the truth about the accusations that happened to me, and I know it's absolute BS. The truth probably lies somewhere in the middle. Both extremes are making things worse than they actually are, and there's probably some truth in the middle anyway. Thanks a lot for that, Annabelle. I think it was a really useful.
Yeah, and that goes the other way too, right? Like, I don't think anybody should be accusing you of some of these crazy conspiracy theories. I've definitely been accused of things before that were insane. It doesn't feel good. It'd be better to let the facts play out and get to the bottom of things, but not just accuse people of being, evil or, conspiracy.
Thank you very much.
Okay, let's just bring Dude back on. I believe he had a second question to ask before he got cut off.
Thank you, Azad. So on the AMA, or on the all hands call that was leaked, Alex talked about a custody model for a going forward concern. And meanwhile, they're actually trying to auction off the GK8, which is a custody solution, presumably that they bought about a year ago for like $115 million to sort of build out a custody solution for people. So it seems a little bit contradictory to me that they're moving in that direction, but also selling off that asset. I feel like the custody idea is a little underwhelming, but I wanted to get, Simon's opinion about that. And is there a viable business model around that with the level of employees that they have and everything else? I mean, would they have to be a lot smaller? Or is there enough profit in that? I mean, it just seems kind of far-fetched, but I want to get your opinion.
Yeah, now that's public information. Let me just give some random thoughts on it. I believe that leaked because that was a voice that wanted to be heard, and so that I don't know how it got leaked or what that is. I know I was accused of paying someone to leak it from Alex's wife. I believe that wanted to be leaked because it was a voice that couldn't be heard. So that's the first thing. The second thing is, in terms of, and that's speculation, got no evidence for it, just a hunch. The second thing is it gives indications around, is there a model that's unregulated? And it also makes me think that, again, it's what Alex does best and what he did for years on AMAs, is take the current reality and spin it in a way which enrolls people into a vision. So, the part of the vision was, this is amazing that we're in chapter 11, and a very persuasive pitch around how this is the best thing that ever happened. And then comparing it to other companies in so that you can make those analogies and ultra persuasive. And then saying that, we want to be, again, this is what went wrong with Celsius in the beginning, right? People thinking it's a DeFi solution, the original pitch, and then it turned out to be a CeFi. And then saying that, and then changing the narrative of, oh, we built this whole business on telling everyone that fees are evil and all of our competitors are evil. But now we can charge fees, and fees are a good thing. The community want that. So what it implies to me is that this is the same as what we've always seen, and an indication of that, and it's very persuasive. And then the evidence not matching the narrative, as you said, that if this is a custody solution, why is there an auction of the custody solution? And can you have a centralized company that does a decentralized thing? Again, making it sound like this service doesn't exist. Casa has that solution. BitPay did multi-sig wallets a long time ago. Casa has the retirement solution where, so these solutions do exist. And so, it's just, again, playing to the narrative so that we get the same. And I think that re-energized a subset of the community. And I think that was the goal of the leak call, to re-energize that who they believe is their target customer. And so, that's how I interpret that whole thing. I also see certain contradictions that don't quite make sense to me. But, everyone's free to interpret that in the way they need to interpret it. And if it re-energizes a certain subset of the community. And again, I always try and return back to the original goal. The original goal, depositors first. So whatever plan gets creditors the best result, and unfortunately that's subjective because one person's plan may get a good result and another's might be bad, and that takes a bit of venture capital judgment. But whatever gets everyone their depositors. So if it turns out that there's a plan where we just sit on these staked assets and everyone gets their staked coins, and there was a fork, and that fork becomes valuable and feels part of the whole, and this mining operation is profitable and it can IPO, and then you need to find a home for those that are in loans, and there needs to be a regulatory solution, and then there's a decentralized solution that genuinely is decentralized, not the confusing pretending to be DeFi but actually CeFi, and then there's all sorts of actions happening in the background. These are really complex things, and but the opportunity's there. There's and that's why I'm still bullish on the fact that that there's something to be done here. I had a big list of things that I thought were a little bit contradictory, and when I wasn't following all the AMAs, but when people share me clips of the AMAs, when I started to get more involved in this, that's when I started to point out some of the narratives that don't match the reality, and I saw some of those again, and it felt like the same as before to me.
Thanks, Simon, for your insight very much. Thank you so much.
Thank you.
Okay, next speaker is Henry.
Hello?
Hey, Henry.
Hi. Can you hear me, guys?
Yeah, you good.
Hi, Simon. It's been great having you. I've been following you from the beginning. I also joined a couple of times on these MMAs. So I got a couple questions here. I also believe that was leaked. I mean, because you could see who were riled up. So anyhow, leaked or not leaked, here's my couple questions. So I'm going to try to be like in the middle on this call, although I love your plan and everything. Although I haven't seen the details, but you have skin in the game much more than I have the skin in the game. So I don't think you would be burning your own bridge. So it's just common sense. So for the people that are so heartily supporting Alex, if they're here, I would really like to know, how do they really think that whatever plan is there, and whatever plan somebody can come up with, really wonder how that side really thinks that it's going to be easier for Alex to institute than somebody new like you or somebody else, completely brand new. Because that's one thing I really try to understand everybody from every side and angle, but I really understand how Alex can, institute anybody's plan. And it doesn't even have to be his, even if it's the greatest plan, and you agree that it's the greatest plan. I mean, common sense tells me that, he's been a victim of his own success, because on the one hand, he's been very successful, but now he's very polarizing and also created a lot of enemies. Plus, the SEC is going to be extremely looking on his backside. So that's why I really don't understand how he can institute any plan, even if it's the best plan under sun. Do you agree with what I'm trying to say here?
Yeah, let me try and play devil's advocate on myself. So, I agree with a lot of that, but let me play devil's advocate on myself. And if you want to, go join. There's plenty of spaces where you can ask them direct why they believe what they believe. And I encourage everyone to do that if they want to understand that different perspective. Try and see it from both sides. So I'll play devil's advocate on myself. There's an argument that the person that created this is the best person to try and get themselves out of it, because they know the nuances and they know all the hidden secrets, and maybe they can fix some of those hidden secrets. I think hopefully the Chapter 11 puts transparency on a lot of those things. My opinion about Alex is that he's a very accomplished at running tech startups, but he wasn't appropriate for a financial services company, because there's another level of accountability to the truth that you don't get at a normal startup. In startup world, you're pitching investors and you always have to show the best side of your business in order to get the funding. And you have to have a parallel reality that most people think is crazy. And you have to believe your reality, because when you're pitching investors, you're only going to get it if you have a certain level of conviction and congruency about a reality that doesn't exist. And that's really part of the successful startup. They live in a parallel reality. Now, with financial services, you have to underpromise all the time, and you have to really embrace the compliance and regulations, because you have to have a certain level of empathy towards this is people's money, and you have to take that really, really seriously, and that's a difficult thing to do when you're trying to pitch your vision, because you have to underpromise everything, so Alex's personality, in my belief, is not appropriate for that, for financial services. Now, maybe there's an argument, for example, with Bitfinex, right? When they got hacked, there's another argument that once you got hacked, you're probably a lot stronger than an exchange that hasn't been hacked. And so Bitfinex made massive, radical transformations to their security model, got rid of BitGo, started doing their servers in various different structures, introducing back to the model that they had. It was a radical improvement, because if you're the type of person that learns, you can learn from your mistake. My fear is, and then getting back to me rather than devil's advocate, is that after a decade of being involved with regulators, I know the point blank reality that this would defy gravity if a regulator would allow Alex to lead this business after this. And my fear is that will lead to Chapter 7 after burning a load of money, and regulators pushing back and everyone getting the worst result. And so what I would like to see, and I'm just trying to, I can never put myself in Alex's shoes. I do have empathy for Jesus. I can't imagine of what it must be like hearing these stories and feeling like you might be responsible for some of this action. I can't imagine what that's like. But in my mind, I would try and support somebody that can do this, can get past the regulatory hurdles, and be in the background to do everything I could do within my power to try and get a team that could get past the regulatory hurdles and support them.
And
Because I
so,
think that would be the right thing to do.
yeah, and I kind of agree with you, and I think it's going to be easier for some brand new face to get some new money and fresh money in, because like I said, he's great on what he did, what I mean, like you said, from perspective of startups, and he's got this charisma. But on the other hand, right now, it's just it's actually, that's something that's going to hinder him, because everybody put the trust in him, and now it's just the opposite. But being on ISB, time will tell, and we'll
Yeah.
see. But so I have another question here on this
Yeah,
part,
let me add
because
one more point, then we'll take your second
yeah,
question. You should also be skeptical and listen to their, this all happened because correct disclosures weren't made. And so beware of, my self-interests, and whether you think those line up, and then try and make sense with your own logic of whether, I'm trying to do something that benefits me or trying to do something that benefits the whole community. And there's two narratives. And so I've disclosed all of my interests, and, when I'm saying things, I also have a bias. And so you should try and see through the lens of, what are those biases? And that's a tricky thing. So, and everyone has to come up with their own opinions.
yeah,
Okay, second question.
yeah, I do. And so here's my second question. So second question is, while everybody says, and I heard it here today also, like how much better off Voyager is, right? And BlockFi too. But here's so that's why I'm trying to come in with clear thinking here. While, yeah, it might look like they're better off, but I still can wrap my head around. I mean, Alex is kind of like, I have a boss very similar to Alex, so I kind of see how he works. Anything goes, and a lot of times he just gets lucky with whatever he says. But here's the problem I have. Like, I cannot wrap my head around about Voyager being like company that's publicly traded, lending money to two people with nice smile, so much money without collateral, and same thing with BlockFi. So I mean, those two companies actually make Alex look not that bad, that he actually didn't lose so much of our money in Luna, and the other 2 Hours Capital company, or whatever that name is. What you thinking about that? Because I mean, while it looks much better in Chapter 11, I mean, you know what, Alex, I can understand him, just whatever he says, he just does. But those two companies with that kind of structure and everything, lending money without collateral, just like that, like, what's you say about those two things?
Yeah, I think it's really easy to diagnose with hindsight. And in crypto, that it's so obvious what you should do after. And so, if I look back in history, then we would all have in 2009 bought a laptop and started mining Bitcoin. And then we would have put all of that into the Ethereum ICO. And then in 2018, we would have put it all in a stable coin. And then we would have waited for the bear market to ride out and put it all in BNB token. And then at the top of the 69,000, we would have put it all in a stable coin. And we wouldn't have touched Luna. We wouldn't have put anything in Mt. Gox. We wouldn't have put anything in Celsius. It's really easy with hindsight to diagnose. And that's why we got to learn from these lessons and get stronger from them. And so it's just one of those blindingly obvious things that you should stick to the over collateralization, and you shouldn't be exposed to one institutional player. And it is so obvious, it's easy to criticize, but those decisions were made. They had consequences. And I think everyone knows the lesson now.
The only thing I'm saying is, I'm kind of surprised that Alex wasn't in those. You know what I'm saying? Like, for the way he rolls, it kind of gives him a benefit that he wasn't in those two. Like, I'm kind of surprised, because the other company, the reason I had very little money in Voyager was like, I mean, what can go wrong there? I mean, they're publicly traded company. You know what I mean? Like with Alex, okay, Alex is Alex, but I'm kind of like, I mean, it makes Alex look smarter than than maybe he is. I don't know, but I'm just saying, like, it's just a little bit strange for me. So that's the last thing. I just have a last question for you because
So
I never heard
maybe
anybody.
Sean could chime in. Like
Okay.
Sean, what would stop? Like, would I don't know how you subjectively answer this, but what stops Salt being lending loads and loads of money to 3AC? Like, you know, have you got anything to add here?
It's very simple. And in fact, I think this is like the hero product and takeaway on so many levels from 2022, that if there was a lesson to be learned, there's many, but one of them is that borrowing against something that is pristine collateral or has a liquid market or can be treated as an excellent form of savings and property responsibly, meaning lower LTVs, never over leveraging, etc., it's a safer form of lending. And so I'm taking the long road here for a reason, which is that if you look at Luna, they had problems with the collateral and being under collateralized or bad choice of collateral. If you look at Theros Capital, perfect example of why you don't ever lend without collateral backing it. And in the past, you know, the world I grew up in when I was in my 20s and 30s and borrowing and building my kind of my wealth and whatnot and doing car loans and home loans and everything else, you didn't have a lot of good options. And that's why when this came along, it was such a compelling idea that you could hold Bitcoin and you could borrow against it safely. And I feel like if you apply that logic and just say, okay, well, what if Voyager had used that instead of, you know, thinking about institutional lending with preferential margin and these other things which give you more utility and yield, but they expose you to something which is catastrophic. And in this regard, if you apply that to every one of these scenarios, I think it's true. There's almost, I could argue that maybe this entire collapse wouldn't have happened if we just simply, you know, said, never go above LTV at 50% on certain types of collateral when lending. Forget this other stuff that we used to do. There's a better way now.
Yeah, so I think you bring up a good point. You know, let's give credit to Celsius. They didn't have the same exposure to 3AC, and I don't think this is a, you know, this shouldn't be a one-way bashing. There should be.
That's true. Like everybody's, all the companies'
Yeah,
scenarios are different, right?
and what I'm saying is, I kind of feel better having GK8 on the balance sheet, and whatever's the mining company is profitable or not, but at least there is equipment without like money in the air that they're never gonna get back from those two people that actually like flew somewhere and not like who knows what they're doing. You know what I mean? So yeah, that's the point across I was trying to get, because I haven't heard anybody touch on that. Last question on Assault, Simon. So this is gonna be a harder question, because when I read that you're actually acquired or bought, or I don't know, because I haven't followed 100% with Salt. I think you acquired Salt or investing in Salt. So then
I'll just clarify it. We have every intention of doing that. We've signed an LOI and we're negotiating definitive terms pending regulatory approval. But okay, we have every intention of doing that. And that was only considered as due to the fact that we were trying to figure out how do we put together a structure that can make depositors whole if needed.
Oh, so that's what was my question, because my question was then why would you need anything to do with Celsius going forward? But so can you explain how does that benefit depositor first, you acquiring or doing something with Salt?
So if you look at everything that's happened here, I've tried to always get 10 steps ahead of what I think is happening next. And so that's always been my approach here. So originally it was about supporting Celsius in saying, here's what we did with Bitfinex. And I think you guys can do the same. And trying everything within my power to try and make that happen. That didn't happen because there was obviously disclosure challenges as a result of everything that we know that was filed in the Chapter 11. And then we started thinking about, well, how do we find investors that can fill the hole? And then we needed more transparency on the hole. That later came. Spoke to as many people as we could, see if there was a bailout. it wasn't feasible given the size of the hole. And so then we started thinking about, well, there is going to be a huge regulatory challenge here. Is there anything that we can do to put together a structure where, if needed, then, again, I came from the lens of, I believe that I've got a big hole here on my deposit, and therefore, how can I fill it? And I came from the lens of equity being able to fill it. And so that we knew that what we needed to do was going to take a lot of time. And so, when Sean and I had these conversations, it was all around, well, let's make sure that we can put something together because we don't know where this is going to go. And so we started working on it because you definitely can't do this last minute. It was like when I originally said, this is going into Chapter 11, we had to prepare for that, and no one believed it. Everyone called it FUD. I said that there's insolvency. We had to prepare for that. No one believed it. Everyone called it FUD. And then I said that there's a possibility that this can't get out for regulatory reasons, so we need to prepare for that. And that's a much, much harder problem to solve. And again, I always return back to my original mantra, which is if anyone has a plan that is more likely to fill the hole for depositors, then that plan is the one that should be selected, and it's subjective. And so I'm going to give as much content, as much information as possible to help people make that decision, because eventually this goes to vote. And, if a solution is needed, then we believe we have a useful solution and we'll engage in that process, but I'm not able to talk about non-public information.
Awesome. Okay, so SALT is part of the plan. I can actually take that in like that, just simplified.
Bank to the Future has regulatory approvals that SALT doesn't have, and SALT has regulatory approvals that Bank to the Future doesn't have. Combined debt and securities, and we believe we have a solution that has been through over a decade combined of regulatory scrutiny in a very, very regulatory hostile environment where the problems you need to solve are immensely complex. And I wanted to combine our experience in securities with Sean's experience in the lending and yield market, and all of our regulatory hurdles that we've had to overcome for over 15 years together combined, I guess.
Awesome. Okay, that answered my question. Great conversation. Thank you, Simon. Thank you, Plenty. Awesome, hearing different perspectives now. Thanks a lot.
Okay.
Hey, guys. I can see that Alex Mashensky would like to talk.
I don't think Alex is able to talk. I don't think that's fair. If he wants to talk, then he can, but his legal counsel would have told him that he can't, and it's not fair to judge that. But if you do want to, Alex, I doubt you do, but if you do, put your hand up and you're welcome. But it's not because he doesn't want to. I'm sure he's behind right now, and it's very painful for him because he wants to say things. And it's not because he doesn't want to. It's because his lawyers won't let him. So let's not judge that.
So should I bring him on? Because
I don't think he can. He's given a heart emoji, which means that he can't.
All right. Okay, cool. Okay, let's put Shauna, next speaker.
I think Kaz was before me. I'll wait.
There's no particular order, but yeah.
Oh, okay. Sorry. Simon, I'm going back to what Henry had said, and he had asked you about what plan, and you were saying why your depositors first, and I honestly don't really care who runs the business. I do care if we can get out of this bankruptcy the soonest. So logistically speaking, I would assume, and I'm no lawyer, and Crypto YOLO could probably come up, but from what I've gathered, Celsius has the first right of refusal, and they have the 120 days exclusivity or whatever, exclusivity, and then they could actually have an extension. So hypothetically, if we're just looking at numbers here, wouldn't it be best for us all to get behind Celsius and get this approved and out of bankruptcy as fast as we can. And YOLO has told me the best way to do that is probably through Celsius's plan. Otherwise, this can be dragged out and we can go into chapter 7, which explain to me why, if you could put your ego aside and you say you care about depositors, not about all these other things, would you not get on board to approve Celsius' plan?
Yeah, if there's a plan that genuinely gets traction, that can take Celsius out of Chapter 11, that is much, much better and more likely, and there is genuine reasons why that would happen, because a reorg to a new code, to new management is complicated, and is less complicated than existing management and existing structure, knowing some of the challenges, just like we know lots of the regulatory challenges from 10 years of securities laws and 5 years of lending challenges, and those can't be picked up. So if that is the solution, then that is the solution. It's depositors first all the way. I have a thesis or a theory that is grounded upon a strong set of experience that the regulators are going to be the biggest hurdle, and that will slow down things a lot. So I think for that reason, there has to be a management team that regulators would make a very, very strong statement if they allowed the existing management to continue this and reorg. And I think it's an insurmountable hurdle. And so therefore, that hurdle needs to be overcome. And then there's the securities laws part, there's the custody laws part, there's the lending laws part. And so I believe that an unrealistic plan will hinder the process, because it will burn a lot of cash and lead to Chapter 7 liquidation. I'd rather be ready for, if needed, there's a solution that could put depositors first if what I think is going to happen.
I could be wrong, but I've heard YOLO, like this is a precedence in case, right? So you're always concerned with regulators and how this can be approved. But if it gets approved by Judge Glenn and the plan gets approved, then I think this sets a precedence and we don't need to be worried about it. Are you worried about regulations after we come out? Because
Absolutely,
I think that's all going to be taken care of within 100%. Chapter.
Sorry, it's very confusing, I know. There is a precedent to be set, for example, that you could allow loads of equity holders pending the company going public and use the Chapter 11 process in order to issue shares to non-accredited investors. Don't confuse that with all of a sudden we can circumvent securities laws, set a precedent. Those things aren't going to happen, in my opinion. If they do, if securities laws are defined in this case, it goes against everything that experience is telling me, everything that regulators are telling me, and everything that's ever happened. And so that's the thing.
Well, I heard YOLO just DM me and said that within Celsius's plan being approved, you can actually have management change within Celsius plan through it. So this is all possible. So I just don't want that to be, I just hope that
I'm completely open to those possibilities. Completely open. Again,
okay,
it is depositors first. 100% is depositors first.
With the SALT lending, acquisition, it almost seems like you want to have it already, but it almost is like you want us to go to Chapter 7 so that you can take us over afterwards.
Nobody wants Chapter 7.
Hell no.
It's bad for everybody. I would argue we're all already sucked into this and part of the community one way or another, and that's why I think we're always advocating, at least I am, I'll speak for myself. I'm advocating for everybody to come together to work against the real enemies here, which is the failure rate of what happens if this goes south, and how do we all kind of get beyond that and find the best possible solutions.
Right, Sean, we've talked about this.
Here's what Chapter 7 means. Bad for the industry, bad for depositors. Then some predator comes along and buys up lots of the auctions for pennies on the dollars, and their equity holders benefit. Rather than everyone else getting equity through a reorg. It's the worst of everything.
But hasn't that been you that comes in at the auctions on pennies on the dollar and buys up these companies? That's my whole thing. That's what you have done. And so it kind of seems like...
When have I done that? I came here and said, let's do a reorg and make sure everybody becomes a shareholder so that the equity holders in the acquiring company don't benefit, the victims benefit. That's my, from day one, strategy and approach.
Right. And I just hope, I heard you yesterday, and I am too, like a Cinderella story to come out of this, have the company intact, keep its thing, and walking is like the best for everyone in this industry. So I really hope that that's what happens and you get behind that, and we don't have like an ego match and a vindictive thing, that we can put those aside and just want the best for the whole industry, not for individual people in it. And I just want to let you know, Alex does want to speak. So if you would be gracious to bring him up and to talk. I think you talked in a space where he was there. So I mean, this would be precedence if he's willing to talk. He said that he would like to talk. So I don't know.
If he's asking to come up, you should bring him up, Simon.
Okay, yeah, we'll bring Alex up. So Alex is here.
Hi, can you guys hear me?
We can hear you, Alex.
Yes, great. Thank you for letting me speak. Since Simon was been on our channels a dozen times, first of all, Celsius bankruptcy is not like all other bankruptcies. There are no bondholders or other people in front of the community. The community is the creditor, the main creditor, which means the community owns most of the company, most of the mining company, most of the cell token. So if Simon's trying to make you go somewhere else, that diminishes, that makes you throw stones at your own house. We are here to fix Celsius. We're here to bring everybody together. We're here to extract as much value as possible for the creditors, for all the people who are owning part of Celsius. I'm a creditor, just like you. One of the largest creditors, just like you. Okay? So instead of fixing, let me finish. Instead of trying to fix Celsius, Simon is trying to take you to a different house. Say, hey, forget about this one. Doesn't matter if you own a piece of it. Come with me somewhere else because we're going to make it better over there. That's not going to make it better for you, for what you own in Celsius. For us to maximize the value of the company, we need to stick together and rebuild this company. That's all we need to do. Okay? And I'm shocked.
Okay, Alex, how would you suggest? How could I help in that process?
Who is he's betraying his own investors, the people he brought into the A round to come in with him. Instead of fixing the problem, help fix the problem, he's trying to buy it on the cheap. He's trying to take you somewhere else. Just like if there was anybody who didn't help their fellow man, it's Simon Dixon.
These are
okay. So Alex, what would you like?
Plain C, stop.
Let's have a constructive conversation with
Plain C.
I'm allowed to speak. All I'm saying is let's have a constructive excuse me, I'm talking.
So Alex, what could we do to help better?
We have a process. It's called Chapter 11. We all are part of that process. You have an idea, you have a way to solve this, you need to submit a plan to the UCC. That's what you need to do. Bringing on
that's not quite the process, Alex.
Bringing on a competitor of Celsius and trying to convince people to switch over, trying to convince everybody that somehow the other house is better while everybody's suffering.
You know as well as us that we you know as well as us that both Sean and us have offered up solutions, and you know the process is not to go to the UCC. It's to go to the investment bank.
Did you submit a plan to the UCC?
No, it's not to the UCC. It's to the investment bank that Celsius has engaged.
You need to submit a plan to the UCC, Simon. That's what you need to do.
Okay, well, that's not the process. The process is the investment bank.
You created your own process. You decided to create your own process. You're trying to take the Celsius community somewhere else. You're basically telling them, guys, come take new loans with
Alex, did
salt
both
lending.
Sean and I offer up all of our licenses at one stage to try and get this compliant?
This has nothing to do with any of that. Okay, this has to do with all the people on this call getting
Do you
as
agree?
much
Do you
as they
agree
can
that the
back.
regulators are a big part of whether this actually gets out of Chapter 11?
The only thing you have to do, Simon, is submit a plan. Can you submit a plan? Instead of giving all the excuses
And
in the
it doesn't
world,
go to the UCC. It has to go
instead
to
of
your investment
instead
bank
of
that
all
you've
the
engaged.
excuses, just submit a plan.
And you know what process and what I can and can't say and what documents had to be signed that is preventing me saying what's happening here.
Simon, come on. How many months did you spend in the data room at Celsius? Can you share it with everybody? Just tell everybody.
There's a document that I had to sign that doesn't allow me to answer that question.
Oh, really? Okay.
Yeah.
I think you already
the process is
you
the
already
investment
violated
bank
that document by
Celsius
disclosing
controls.
certain things on calls before. So I think you're already beyond that point. Okay. So anyway, look, I'm trying to be constructive here. Okay.
Okay. Let's do that, Alex.
We are trying to help the Celsius community. We're trying to return the coins to everybody as fast as possible. That's what we all should be focused on.
Okay, and should we be focused on getting this so that regulators allow this to come out?
You keep coming up with every excuse possible to talk about everything else besides what I just said.
You know that's the issue, Alex. You know that's the issue. You're just trying to avoid that.
Can I ask a question to Alex? It's an important question for everyone.
I think he's left.
It's a very simple.
Look, to be fair, sorry, Pansy. To be fair, I want to be fair. Alex literally just came up against all of his lawyers' advice because this meant so much to him to say and it's very, very challenging for anybody to have to listen to this without you getting your say. Okay, so he dropped off not because he didn't want to, because Alex would, stand up to anybody. That's certainly something he would do, but he left because he had to. And so I just want to be fair because we could say a bunch of stuff right now. And he is in a very difficult situation where he's not able to respond, which is very unfair, but it's the situation we're in. The regulatory issue is the issue. Any plan has to get signed off by regulators, and we are following the process, and the process that we were just told to follow is not the process. Okay.
I mean, I respect the fact that, coming on stage against his lawyers, that's a big deal. He obviously wants to speak. It's obviously hard for him, right? It's obviously hard for 300,000 people that are, lost money too. But I just wanted to ask Alex a very simple question that is very relevant to this entire process in bankruptcy. My question for Alex was, and I know he wouldn't have probably been able to answer it, but it's something that I think everyone needs to try and figure this out. Who owns the shares to the mining company? Is it owned by are there shares owned by the Celsius founders, like the C-suite, or is it owned by Celsius, the company? Who owns the mining company? Because if it's owned by, if there's a lot of shares that have been given to founders, why? And what are the reasons for that? We don't know. But I would love to know that. If anyone can find that information, if it's online, I don't know how we can find it. But is it a company owned by Celsius, the corporation, or are there shares that have been given to the founders that were, it's just an interesting question.
Well, the answer most likely is it's part of the state. It is part of the Chapter 11 bankruptcy. It is filed as one. So I would assume it's the state's property at this point in time.
That wasn't my thing. It was to do with what's the breakdown of the shares. It's a very simple question. It's not complicated. Before bankruptcy, who owned the shares to the mining company?
I don't give a shit. Well, sorry, pardon my language. I don't care about prior to bankruptcy. We're in bankruptcy.
Hey, so Jason, do you mind if we we really want to have a constructive conversation?
I'm sorry. I'm loud. I'm not yelling.
Everyone has a right to ask a question, and all I'm doing, whether you agree with it or not, is I have a very simple question that I think is very relevant.
This room's so censored.
And it's something that I think should be answered. That's all I'm saying. We can disagree if you want. That's fine. But
No, I'm telling you right now, it's part of the estate.
my question
Yeah,
was.
so let me answer that for you, Plan C. If you want that information, and it's not publicly available, then you'd have to file a motion, or you'd have to be in a process where you get access to non-public information. If you think that information should be public, then you're going to have to follow the Chapter 11 process.
Okay, that makes sense.
Now, I did have a question for you, Simon.
Go for it, Jason.
So, during your due diligence of your round A, round B, did you not have months of time in their data room? I've gotten information that you have. So, like your statement saying that you didn't know some of these things and all that here and there, you had full access.
So yeah, answering that question. So firstly, I'm the CEO of the company. I don't conduct the DD myself. We have a broker dealer that does it as per US standards, and we have a non-US broker dealer that does per the Cayman Island standards. From my memory, there was no data room, and we requested all of the DD, and they sent the documents that was requested. And for the Series B, there was we didn't gain access to the data room. We requested all of the documents, and it never got signed off at the regulatory and financial stage for the Series B, and therefore the round never went ahead.
I believe you should go back to your broker dealers and have that discussion with them again, because my information is telling me that they did. And that you have a lot more information than you're letting people know.
Yeah, no, I remember the process, and all of that information is on file. And if it becomes relevant, then it can be, go through the process of making that information public. Okay, thanks, Jason.
Having listened to a lot of the AMAs and other meetings at Celsius, I can't help but say that most of those conversations are much like a 12-step meeting without the accountability. And the ad hominem stuff from Celsius to Simon and others is just annoying background noise. I'd like to know, Simon, from what you're seeing now, how are we doing from an adult to adult perspective? Are you getting the information, or is the information from Celsius clear and forthcoming? And how would you assess how we sit right now?
I hate to say it, but I'm not able to discuss non-public information.
Fair enough. Thank you, Mark.
Okay, so we're over what we were going to do. I'm glad we stayed around, because I think that was pretty. I do hope that doesn't put Alex in a legal compromising position, that's what the situation is. We were going to be ending soon. We could take a few more, but don't want to go too unproductive. I'm hoping we can continue along the means that we have been, but we were going to be ending anytime soon. Is there anyone that's already up here that wants to say something and keep it constructive?
Okay, we got a hand up from JP.
Hey guys, can you hear me okay?
Yep.
Hey JP.
Hey. Yeah, that was crazy with Alex just coming on. But I just really wanted to first off thank Simon, Azad, Plan C. I don't see Thomas up here anymore, but just really wanted to thank everybody for hosting these AMAs, and it's just so comforting to know the community is here and we can all share the journey together. So just to give you a background, I bought my first couple of Bitcoins back in 2016. Went through the bull run 2017, rolled it all the way down, bought a couple more. Fast forward, COVID crash happened, and ended up putting most of my savings in it, along with my family savings. And a couple of months after that, stumbled upon Celsius, put pretty much everything on it. In retrospect, probably not a great move. Hindsight is 2020. You know, like Annabelle said before, if I had maybe kept up with the AMAs or been more on top of what was going on with Celsius, might have pulled my stuff off earlier. But again, hindsight is 2020. I think the silver lining to all of this for me was getting to know Simon. It led me to you. This whole process of bankruptcy, Chapter 11, everything has been such a learning experience for me. And I'm hoping to apply it to my life moving forward. So just looking to be positive. Again, like I'm so comforted that the community is here and I'm learning. I love Simon's Bitfinex plan. So this actually, my question actually is super, super specific. And I'm sorry to take up all your time. And it might be more for Thomas, and I don't see him up here anymore. But I'm just gonna ask it anyway. So I live in a state that Celsius is allowed to operate, but I work in a neighboring state where Celsius isn't allowed to operate. My account is based in the state that I live in, but I had no real problems accessing my account in the state where I work in, moving my coins, doing all that stuff. I'm like, no problem. So now that this bankruptcy has happened, I'm facing a situation where I might need to relocate to the state I work in. So I just wanted to, I think this question might be more relevant to Thomas, but
I get the question. Firstly, JP, thank you very much. Please don't take this advice because I'm vastly underqualified in order to answer this question. But my guess is, and again, do a DM to Thomas. You also might want to get your own counsel on this one, depending on the size of your claim. But these are complete speculation that you really shouldn't rely upon because I don't feel I'm an expert to answer that question in any way, shape, or form. But I do believe that it's the state in which the Chapter 11 was filed that's more relevant, and that it will follow the process of that state. And I believe that when the claim form comes, make sure you put your up-to-date information, even no matter what's on the account. And that's the reason for the claim form, is to make sure that the data that you had on your account may be slightly different to the reality of today. So I think the claim form is about getting that data correct, and it will pre-fill it out. And in my understanding, and again, I'm really underqualified to answer that, I don't think the state in which you live in matters too much, but maybe it does.
I see. Okay. All right. I'll make sure to DM Thomas on it. But again, Simon, thank you. Thank you so much for all your work and your time. Really, it's
JP,
just,
can I ask you a quick question?
Yeah.
When you were able to do it in the state that's not allowed, were you using a VPN or had your geolocation turned off?
No, I wasn't using any VPN at all.
Okay. I'm just trying to figure out how you were able to do that. It
Yeah,
should have stopped you, but it might have been so close to your cell tower from your home state, like depending on how close you are to your, you know what I'm saying? It could have still thought you were in your home state.
I mean, I'm just like across the river. That probably gives it away a little bit. Yeah.
Yeah, you could have lucked out with a cell tower, not thinking that you're over there.
I see. Okay. Thanks, Shiv. But yeah, again, Simon, thank you so much. I can't express my gratitude more. And that whole thing with Alex just coming on was like so crazy. I just did not see that coming. So, but
I didn't as well. But as I said, I think I can't imagine how frustrating it is to be Alex. Like, if I had to listen to these and not be able to say something, it would be. I can't imagine how painful that is and frustrating that is. So I just want to be fair on that. So much so that he felt the need to do that, which I think is pretty, reflective of how hard the situation is.
Right.
Okay, thanks a lot, JP.
Yeah, thanks.
We are going to wrap this up. Is there anyone that's already here that wants to?
Yeah, Simon.
Hey,
Simon.
Peggy.
Yeah, hi. Hey, Alex kept mentioning submit it to the UCC, submit it to the, he said that several times. And you said, well, that's not the process. You can't just submit it to them directly. And I'm wondering, where are you in that process? I mean, you are doing that, right? You're submitting what your plan is?
Let me say what I can say.
Okay.
We have counsel that are very, very familiar with this process, and we are following the advice of exactly what that counsel is saying, and we're engaging with all the parties, and there are certain contracts that we're not able to disclose, and we're not even able to talk about.
Oh, okay.
I believe that process that was advised to us by Alex is not the correct process. That's what my counsel is saying.
But it sounds like you're moving a little bit toward that, so I guess. I don't know. You can't say.
Read between the lines, Peggy.
Yes, right. Okay, you have a good day.
Thank you.
All right, bye.
All right, okay. Jason, did you want to do a final? You got your hand up?
Yeah, I just wanted to. The one thing that we all, I think, agree on is this motion about sealing and everything like that. And since you have a large room, and I know you believe this too, so I would just encourage people to write the judge if you know of factual reasons why the sealing is prudent. And if you have anyone, same as Simon, has gotten death threats or anything like that, please send it to UST. Show her that this is not a joke and that our phone numbers, our names, our email addresses are our keys to these wallets sometimes. And when a hacker can get a part of it, brute force attacks do work. So there is a real security risk. And even people from the FBI and stuff like that have said this is security 101. Redact it. It's not a bad idea to have the number system. That's pretty novel. That's good. That was a good suggestion. Or the way that Kirkland Ellis said that we could just seal it, put it to the side, but if a party wanted to see it, they're able to through the court process. It's being out in the public is the issue. It's not the fact that we want it all redacted. It's the fact that it's going to be out in public. So please send letters to the judge explaining what SIM swapping is, how your email is a very important part of your crypto wallets and everything. And that's all I wanted to say. Thank you, Simon.
Okay, thank you, Jason. Definitely, I think we can all align on the importance of safety. And I also want to honor Jason that from day one, his primary thing, we disagree with so many things, and that's not going away, because he's very, very strongly opinionated on his stuff, and so am I, and I think it's healthy. But one thing I do want to honor Jason for is that anytime this has gone beyond reasonable debate and is stepping into violence, he's always on top of making sure this is done in a peaceful way. And I think he's been a real champion for that. And although we differ, that's the one thing that we can always unite on. And right in the beginning of this process, I accidentally retweeted something that had some violence in it. And as soon as Jason called me out on that, I immediately deleted it. And that was that type of thing that and I really think that publishing, the judge knows that publishing addresses and phone numbers is completely unreasonable. And I really do like the judge, actually, and I think everyone, I've heard good things.
I love Judge Glenn. I want to have a beer with him.
Yeah, exactly. But I want to, I really want to reiterate that in the height of emotions, we really should not be, calling for violence and publishing people's addresses. And I'll fight for Alex Mashinsky. His address should not be public. He's in a compromising situation. I don't want to see harm to his safety in any way, shape, or form, and nor his family or anything. And Jason's been a real champion for that. So, thanks for holding everyone accountable to that standard. Okay, all right. Well, I think this was way more drama than we imagined, and I think we will do these every week, and if you want to get two sides to the story, Jason's always on Spaces. Plan C always does his Spaces, and I think between us all, we're going to come to something that's better than what we all don't want, which is just selling off all the assets and having the vultures come in. Okay, so we're going to call it quits there. This is recorded, and so anyone wants to refer back to this, then feel free, and we'll put it up on YouTube when we can as well. Okay, thanks everybody. Hey, how do we end this thing? Oh, end.